Hey guys, big warm welcome. Thank you all for joining us today. As you guys saw in the video, we kicked off recently the Revelation Hackathon, which we're super excited about. And today is the FutureFi event, which is one of the sub-events as part of the Revelation Hackathon. So we've got an awesome lineup of guests joining us today. We've got a jam-packed schedule. We're going to be covering a bunch of different topics, talking all good things DeFi. So just to get things started off, I'm just going to share some information and updates about the BNB chain ecosystem and some of the great things that are happening in the community. So as many of you know, we've launched BNB Chain Mainnet in September 2020, and we've come a very long way since. So today, BNB Chain is the largest blockchain by number of daily active users among any layer one chain. I think it's a really awesome and fantastic achievement that the whole BNB Chain community can be super proud of. So there's approximately 1.5 million daily active users on BNB chain. At the peak was above 2.2 million daily active addresses. There's daily transaction volume of above 5 million daily, 5 million transactions daily on the BNB chain. Is also a very large and rapidly growing community today on Twitter, Discord, and across a number of other channels, including our Telegram groups, and over 1,200 applications across a number of domains. A lot of applications in the DeFi space, and we're going to be talking to some of the top DeFi applications, teams from the DeFi applications today, but many others in the gaming, GameFi, NFT, and many more. So today we're going to be spending a lot of time talking about DeFi, and we'll also have a couple of sessions talking about NFTs and gaming as well. But I also wanted to share a little bit of updates on the technology roadmap. So when BNB Chain really started, it was started off as a single chain, which is the BSC chain today, which is the home for PancakeSwap and many other DeFi applications that the BNB Chain community use and loves. But we've also seen the requirements from the developer community, and based on that have been working with community partners such as Seller Network and Anchor on the development of the future of the BNB chain ecosystem. So what that looks like is basically this. So there's a short-term strategy in terms of scaling and a medium to long-term strategy. And this is really driven by the community really thinking about what's the type of infrastructure required to scale to a very large user base. So we're talking about today in the low tens of millions of users. What's the technology infrastructure required to scale to hundreds of millions of users and then eventually a billion users? So in order to do that, we've seen that the current chain architectures and infrastructure, we need to really rethink what those look like based on the limitations of the, clients, as well as other types of supporting infrastructure like data indexing and other kinds of components that's kind of critical for developers to build and operate applications. One of the key and huge growth areas that we've seen is really in the gaming and GameFi space. And I think there also we really do see a clear pathway to reach hundreds of millions and then eventually a billion users through gaming applications. But gaming applications also have their own set of, different requirements from an infrastructure perspective. So even today, if you think about the gaming applications on the BNB chain, they're sharing or they're competing for a shared resource, which is block space. So the block space on the current BNB chain is limited. Of course, like the gas fees are how the block space is priced. And you have all of the applications on the current BNB chain competing for that same block space. But that doesn't always make the most sense, especially if you think about gaming applications having to compete with that same resource compared to DeFi applications and others. So typically we see that gaming applications will also require much lower transaction fees, which the current BNB chain, the transaction fees are based on, of course, the demand, but there, for some gaming applications, we have seen a lot of requirements for cheaper transaction fees, and in some cases would also need chain architectures which provide gasless transactions, so no transaction fees, and also the ability to scale to support much larger user bases. So with these and other requirements in mind, the community has been working on the development of the BSC application sidechains. So the BAS chains will be ideally suited for gaming applications, but potentially others as well outside of gaming. And here the BAS will also have a number of different properties. So they'll have their own validator sets, as well as other types of configurations in how they're set up. So the BAS will be like super highly scalable chain infrastructures that can be used by multiple games. Some of them can be used by just a single game, depending on the user growth of a particular game, and will be connected to the current BSC chain through bidirectional bridges. So the BAS devnets are already launched today. So Seller and Anchor have co-developed the first versions of those and will work on future iterations along with other community partners. So we encourage and invite all the game developers and the game development community to start experimenting and testing out and validating the BAS, the developer nets, and with the aim of launching the main nets for the BAS before the summer of this year. So that's the short-term work happening around achieving scalable infrastructure for decentralized applications in the medium to long term. So from let's say the summer onwards, the developer community and the core contributors community will be working on the development of the BSC partition chains. So the BSC partition chains are basically sharding chains, very similar to the ETH2 sharding strategy, which aims to achieve scalability through this chain architecture. So here we see that BSC is moving from the single chain where it was born into a multi-chain ecosystem, which will provide different chain architectures and basically different choices for application developers to be able to deploy and then scale applications on this highly scalable infrastructure. So that's a little bit about the technology roadmap and what the community can look forward to in the coming weeks and months. So let's move on to our favorite topic, which is DeFi. So we're going to be hearing from a really great group of guests in our sessions today. But before that, wanted to just share a couple of slides covering some information about the current DeFi stack. What does that look like? Also share some perspective on some of the challenges as well as opportunities at the DeFi space. So if we look at today what the DeFi stack looks like, we have a couple of layers. So you've got your base settlement layer, which includes the Ethereum network, of course, the BNB chain network, and then more as we are increasingly moving into a multi-chain world. On top of that, we see the asset layer. So that's BNB on the BNB chain network, as well as a large and rapidly growing set of assets being issued on the BNB chain network, as well as others. Of course, stable coins being a very critical part of the DeFi stack and ecosystem, and then other types of tokens as well, particularly NFTs and tokenized real-world assets, wrapped assets across different blockchain ecosystems, and many more. On top of that, the application layer, and here we can further segment them across a number of different categories. So AMM dexes like PancakeSwap are a core component there, as well as borrowing, lending protocols, the derivatives markets, payments infrastructure, insurance platforms, and many others. And this is really where the imagination and creativity is basically the limitation, especially in terms of how do we really think of this new concept of natively digital programmable money, and the type of possibilities and applications that we can build on top of there. And here also, I think one of the other important points to mention is really the composability of how these applications can be built on top of and interconnected with each other. So definitely we're going to be speaking to a number of projects from the application layer during the sessions today, and we'll be able to dive much deeper into different areas and topics across DeFi applications. On top of that, we see the aggregation layer. So these includes the user experience, like wallet, non-custodial wallets, other types of asset management interfaces, yield aggregators, and then soon as well we expect to see cross-chain aggregation happening. Alongside that, you see a number of important infrastructure and tools. So these include the price oracles, relayer networks, cross-chain bridges, which are becoming increasingly important in today's evolving multi-chain landscape. And these are supported by multiple interoperability factors and standards as well. So here you can see the DeFi landscape, or the DeFi stack is quite diverse, quite comprehensive, and is continuing to expand. Constantly. However, although we've seen massive growth in DeFi across pretty much all the metrics, including TVL and many others, there's still a number of fundamental challenges. If we see that today's total TVL across DeFi is somewhere around 200 and something billion, but to reach $1 trillion and then way more, a lot of these issues and challenges need to be addressed. But these challenges are also at the same time big opportunities. So there's, I think, big reward for solving the big problems. So today, a lot of those challenges include user experience. So if we think about the user experience, especially for net new users today, it's quite challenging. So download a wallet, generate your seed phrase and keys securely, and then store them securely throughout their life from the point of generation. It's not very easy. It's definitely not accessible to all users and all demographics of users. So improving that user experience is a critical requirement. Also, how users get assets on chain. So the on and off ramps to DeFi also need to be improved significantly. Another big area of risk within DeFi is smart contract risk. Of course, it's the promise of programmable, natively digital money, but everything runs on smart contracts, and smart contracts are super complex. They are difficult to build and scale, and smart contract risk is one of the key risks. But today we see great work happening through key partners and innovators in the security community, developing tools around automation, as well as the great work that's being done by the auditing community and others that's working on improving how do we evaluate and manage smart contract risk. I also mentioned just before about one of the great features of DeFi is its composability. But that also does lead to some risk accumulation caused by this composability. So here as well, we need developers as well as other stakeholders and participants to think about how do we really evaluate and control this type of risk effectively. Another area that project teams and projects have to manage well is around progressive decentralization of the protocols as well. So typically, DeFi protocols will go through a similar pattern of progressive decentralization, where in the initial period of development of the product is really being developed by a small core team of core contributors. And that's typically because the design by committee is not very effective and takes a very long time. And is not an ideal way for the products to be iterated and kind of developed until they reach a product market fit. So at the point when products do achieve some sign of traction and achieve that product market fit, that's typically when the process of progressive decentralization will really be kicked off. And that typically happens to two following stages. So one is that the projects will develop a community of users as well as contributors around that particular project. And then eventually, once that the size of that community has reached a appropriate size, will then transfer ownership over the protocol to the community of users and contributors, typically through a token generation and distribution event. So that's another key area then challenge that DeFi protocols and their communities have to be thinking about. In terms of like opportunity areas, so there's a number of them. This is by no means like a comprehensive set, it's just a few of them. There's probably like really good ones missing here as well, but some of the ones that are like big opportunity areas in the DeFi space is around real world assets. So today we don't really see any significant amount of real world assets being integrated in DeFi protocols or used as collateral in DeFi protocols. But we are starting to see the early stages of innovation around how those could look like. But definitely it's a very wide design space and a lot of area for innovation from developers on how to really integrate real world assets in DeFi. Other areas of opportunities include CDeFi. So this could mean a couple of different things. So you might have seen recently launched inside the Binance.com app is the PancakeSwap mini app. So this allows users today in Binance.com app to access PancakeSwap without having to set up their own MetaMask wallet. And there's a large number of these types of users that, for many good reasons, so sometimes they're not comfortable with the self-custody, or for other reasons, don't want to leave the safety and security of Binance.com. And now, for the first time, these users are starting to have access to DeFi applications from within the safety of Binance.com application and infrastructure. So that's one area, but there's other types of CDeFi integrations as well. So I think it's just a matter of time until we start seeing more traditional and TradFi savings accounts and these types of accounts that are using DeFi yield underneath or have other types of integrations to DeFi protocols. Another emerging growth area that we're seeing is around institutional DeFi, especially around compliant and permission DeFi. So here we need to think about, for let's say traditional banks. So traditional banks have a lot of compliance standards and that they need to meet, which today poses as a big barrier and challenge for them to participate in DeFi due to the permissionless nature of DeFi. So typically in just how blockchains are constructed and work is that the addresses are very difficult to identify to a particular individual. An address could belong to one person, could belong to a group of people, could belong to an AI. So that's where compliant and permission DeFi is starting to emerge, where these types of protocols will then enable increased participation through the more traditional and TradFi like banks and other types of financial institutions. Another big opportunity area we see today is around is under collateralized loans. So there are a couple of very innovative DeFi protocols that are thinking about how to provide under collateralized loans. Today in DeFi, lending is over collateralized. And for the crypto asset class, maybe that makes sense. But for when you compare that with traditional banking, it's a little bit disconnected with the model which most users are very familiar with. So under collateralized loans are also like a big opportunity area. The UX layer we touched upon briefly. So today the UX layer for DeFi is getting better. Definitely, like there's a lot of great innovation happening there as well, like great asset management dashboards and all of these kind of things. But still improving the UX layer to a point where people from all demographics, all capabilities around technology are able to participate and use DeFi protocols in a safe way is the ideal state of where we need to be working towards. So that's some of the key opportunities, and really all of these are driving from what we see the current landscape of DeFi evolving into what we are describing as MetaFi. That's really not metaverse, but metadata finance, which kind of aims to become the foundational infrastructure for the emerging internet, Web3, and digital economies. So thank you guys for tuning in. We hope you're able to stay throughout the day today. We have a really excellent lineup of guests. We're going to be covering talks about lending and staking. We're going to be talking about institutional DeFi, the decentralized derivatives and DeFi derivatives markets. We're going to be talking about bridging, about the evolving multi-chain and cross-chain landscape, as well as DeFi security, NFTs, and GameFi. So hope you guys enjoy the programming that's lined up for you today. And thank you all for listening in.
So thank you so thank you so much all. The next session will be in 15 minutes. We will be hosting Venice and Alpaca and the Beefy Finance talking about lending and staking. And there will be special giveaways during the sessions and the breaks. Please stay tuned.
Hey guys, welcome back. So we're gonna get started with our first panel for today. We're gonna be talking about the future of lending and staking. But before we get into it, wanted to let you guys know that we're gonna have 3 giveaways today. So keep your phones handy. The way it's gonna happen is that we'll let you know before, and then you'll see the QR code. Scan the QR code. You'll answer a couple of questions. Put your wallet address in. We're gonna pick randomly some of the winners. Whoever get the answers right, and we get to win the giveaway. So there's going to be 3 of them throughout. So let's get started. Welcome, guys. Great to have you with us. Maybe we'll start with a round of introductions. We'll start with Sean. Tell us a little bit about yourself. What are you doing at Venus? How do you? What keeps you busy?
Thanks, Sammy. I am a head of product here at Venus, and we're focused right now on expanding lending and staking for DeFi. And so, right now, lending is kind of a key component, a backbone to everything else in DeFi. And so, we want to be that central component for the BNB Chain community. We're making a lot of partnerships. We're working on our infrastructure, making it more efficient, getting it ready to expand our line of features to really grasp the areas of DeFi that the community is moving into. So that keeps us busy every day for sure.
Awesome. Great to have you with us. Next, we can go to James from Alpaca. How's it going?
Yeah, hey, Sammy. My connection's not been great today, so hopefully it doesn't cut out at any point. So I'm head of BD at Alpaca Finance, and we're a lending protocol allowing leverage yield farming on BNB Chain and on Phantom.
Awesome. Great to have you with us. And hey, Weso, how are you?
Hey, how's it going? Good. So I'm Weso. I'm one of the lead developers at BNB Finance. I'm also in charge of strategic partnerships. BNB Finance is one of the larger multi-chain yield optimizing platforms. So we got our origin on BNB Chain a year and a half ago. So one of the OG BNB Chain protocols. But yeah, we're integrating everywhere we possibly can, taking advantage of the yield opportunities, coming up with new strategies and new products. So looking forward to what we can continue to develop on BNB Chain.
Awesome. Maybe to get things started, Sean, like if I was somebody that knows like not too much about DeFi or just getting started, how would you describe what a lending protocol does?
Yeah, it's a great question. So as I mentioned, lending is kind of the backbone of DeFi. So what we're doing here is we're accepting assets as collateral. So users that are coming in with compatible blockchain tokens, they can deposit those into the protocol itself. It's fully decentralized on the blockchain. It can accept those and either use them to then lend out as supply to borrowers, or at the same time, if they want to use them as collateral, those individuals can then borrow the liquidity from the liquidity pools that are available to them, other tokens up to a certain limit. And those limits are defined by the risk of the assets involved, what they're depositing, as well as what they're borrowing, in addition to other market conditions like the liquidity of the available token in the surrounding environment, both in DeFi and in CeFi. And then there are other features that might be involved in that as well. The ability to control other features of lending or use of those tokens surrounding those aspects of lending and borrowing. But really what lending and borrowing in DeFi is all about is creating liquidity pools so that those tokens can be shared across entities, across individuals, and be put to use in ways where the original owner may not be ready to use them, as is typical in typical financial markets. That's a key component, sharing liquidity, putting capital to work.
Awesome. Thanks a lot for that. One of the other questions I also wanted to learn more about was how are the interest rates defined on both the supply as well as borrowing side, especially in Venus?
Yeah, so the interest rates themselves, the interest rate model is defined when it's initially launched, the market itself, the market being the pool of liquidity that is assigned to a particular token. So those interest rate models can be updated at later times, but they are defined for a certain period. And those interest rate models give you a specific equation, a specific financial curve that will tell you how much each borrower will be paying in terms of interest, as well as what the supplier will be receiving. But that amount will change over time depending on how much is in the pool and the difference of availability between supply and borrow amounts. Often, in addition to that difference that changes over time as demand decreases or increases, there's also a certain type of model we often use called a kink model. It's where we reach kind of our ideal limit in terms of utilization of the underlying liquidity. If we get above that limit, we really want to discourage users from continuing to borrow, and so we will dramatically increase the interest rate to discourage that going above that point. Typically, somewhere between 70 and 90%, maybe lower if it's a more risky token or a newer token. But we, ideally, we don't want to go to 100%, because if we're getting close to 100%, in the DeFi world currently, these common lending pools, we're doing a rehypothecation type of system where the collateral is also being lent out. So if you get to a point where you're 100%, you're not going to be able to withdraw your tokens as a supplier, because the lenders have all taken them at that point. So we want to keep the limit below that so that there's still liquidity available for suppliers to withdraw when they need to.
Cool. Thanks a lot for that, Sean. James, question for you. So what does leveraged yield farming mean, or leveraged lending?
Sorry, Sammy, I'm only getting like one in every 4 words that you're saying. I'm not sure if it's a problem on my side. I'm going to log back out and log back in.
Okay, we'll wait for you. I can hear you pretty well, but we'll wait for you to come back. Wessel, maybe I'll come to you for a question then. So what does a yield aggregator or yield optimizer really do, and how does that work in a DeFi context? So basically, like, what does BNB Finance do for regular users that maybe don't know too much about how it works under the hood?
Sure. So there's a lot of yield farming opportunities. So whether it's with a decentralized exchange, a lending protocol, or like maybe somebody's like launching a token and they're giving you a yield opportunity. BNB optimizes that opportunity. So a lot of yield farmers, if you're going to, like, let's say a decentralized exchange, or you're going to a lending protocol and you like supply collateral or you supply tokens in an LP, and then you're going to farm whatever the farm token is, you earn on the side, like you're accruing whatever the governance token is, or whatever the reward token is that they're giving out, whether it's supplied by another provider. And so most yield farmers, they really want just like whatever they're depositing instead of like this extra yield on top. So, firstly, you're earning simple interest, right? So you're earning this yield on the side. You have to keep claiming it. And if you want to compound it yourself, it's a little bit of a hassle and it's not really gas efficient. So you have to like go in and claim. And then, maybe if you wanted to, actually do the compounding, you would sell it for whatever you deposited and then, redeposit now the asset back in. So you continually to earn more. So BNB kind of just does that all behind the scenes. So if you're like interacting with, let's say, Venus, and you deposit BNB and you're earning, XVS on the side, we'll sell that token for more BNB. And so then you're always earning more BNB. We do the same thing with the, decentralized exchanges. So whether it be PancakeSwap or ApeSwap, we're, selling whatever the yield is for more of the deposited asset. And what's that doing is giving you like compounded interest. So now your simple interest return is much greater now that it's compounded. And we like maximize those yield opportunities on pretty much anywhere we can, and there's a demand for it. But yeah, that's in essence what yield optimization is.
Awesome. James, welcome back. Just checking if you can hear me any better.
Yeah, sorry, I've been having issues all week. It's okay for the moment.
No worries. Cool. The question for you is, would love to hear from you. What does leverage lending, leverage yield farming mean? Considering I don't have much prior knowledge.
Yeah, sure. So, I mean, the concept behind leverage yield farming it's not as complicated as it might seem. When it's quite a daunting kind of term, like leverage yield farming, but it really is like if yield farming with X yields you Y returns, then yield farming with 5x yields you 5Y returns, right? So in other words, basically borrowing funds to ramp up your position using leverage multiplies your yield, right? So of course it's not free. So like any lending platform, you have to pay borrowing interest for the privilege to use those borrowed funds. But where leverage yield farming kind of shines is in its capital efficiency. So the ability to borrow more than you put up as collateral.
Awesome. Thanks a lot for that. So I think, yeah, you touched upon a really interesting point here, which is about capital efficiency. And we hear a lot about it in the DeFi context, where a lot of DeFi protocols are not capital efficient. And that's one of the kind of areas for innovation and continued development. So Sean, we'd love to hear from you on that part. Like, how do you guys think about capital efficiency, and how are you guys thinking about tackling this particular problem?
Yeah, that's a great question. I think this is something that kind of dominates a lot of the financial world. Like, that's what we're thinking about all the time. How do we use the tools that we have in front of us to provide more efficiency and more use cases for each particular customer, client, individual that we're targeting? And so in a general sense, in capital efficiency in the financial world really focuses on certain areas. One would be access to liquidity, access to capital. So you need to be able to make sure that the free flow of money and assets across whatever borders you might have is really, there's a little friction as possible in that area. So in terms of blockchains, the friction there would be cross-chain. So you want to make sure that there is an easy way to get across chain, whether it's the time that it takes to get across chain, which right now, it can be quite timely in certain instances, whether or not the fees to get across chain are more difficult or higher, creating difficulty there, or other areas where you might have capital that's kind of getting locked up and pooled in areas where it's not being utilized as efficiently as it could, being spread out. So cross-chain is one for us. The other is really just understanding where are the ways that we can utilize assets and tokens in ways that they're not being utilized currently. So for example, in the proof of stake system, for proof of stake blockchains, you need to stake tokens for the security of the blockchain. And so it's very important that those tokens are being staked, but at the same time, those native coins are highly used in DeFi. And often in DeFi, you can get higher yields outside of being staking with a validator node. And so we want to provide incentive to be both a staker and then also use those funds in the DeFi world itself. So one example would be, let's take the tokens that are being used for a validator node, let's also wrap them and make them usable in the rest of DeFi. So that wrapping concept that sometimes is leveraging, but often is just a derivative representation of the underlying token that's not being utilized fully. Making sure that we're engaging all of those levels. Proof of stake, that validator node staking is kind of the bottom layer, but you might also have other rebasing tokens. Rebasing meaning that they're gaining value over time, and other ways where you can wrap them. So liquidity providers and decentralized exchanges, often that's an area, especially right now with pools that for exchange that are not very efficient, where there's a lot of capital in those swap pools that are not being utilized, unlike what they would maybe in an order book. You need to make sure that you can also use those LP tokens, we call them liquidity provider tokens, elsewhere in DeFi, because they still have a value that's not being fully realized. And so things like that, using liquid staking tokens, using LP tokens, making them usable in DeFi in terms of lending, in our case, is one area where we can increase capital efficiency.
Yeah, I mean, just to build on what Sean has said, I think it's probably one of the most important issues around DeFi, and I think there's a few different ways to kind of tackle the capital efficiency issue. Like the first is, as Sean has mentioned, like rehypothecation of assets, liquid staking, et cetera. I think the second is via more efficient collateralization, which is kind of what we're doing at Alpaca. We can offer under-collateralized loans safely because those borrowed assets have to be used within our platform for leverage yield farming. think the third way that I've seen is via like unsecured credit. So, mechanisms that allow lenders to get recourse if borrowers were to run away with funds. I think that brings about the issue of identity, and I know a lot of teams are playing with on-chain identity concepts at the moment. So there's a lot of different ways of doing it, and I think a lot of different teams are approaching it in different ways. But yeah, it's super interesting to see what people are coming up with at the moment.
Yeah, I think definitely agree. I think Sean touched upon like two really interesting topics here. One is around liquid staking. We're seeing this like rapid growth happening around liquid staking across pretty much every POS network today, and that's definitely a very clear trend. We'd love to ask you guys a couple of questions about that, and then of course the other point is around like multi-chain and cross-chain. I know all of you guys are spending a lot of time on that, and I know for the guys at Beefy, working across, I think, like a very large number of chains at this point. And there also has its own kind of issues and challenges around capital efficiency as we see like more proliferation around bridges, and that becomes like just race to zero, especially for end user costs to bridge across different networks. But maybe we could talk a little bit more about liquid staking. I think, of course, massive growth of Lido, and like today, I think it's like very quickly closing in on Curve's total TVL, may become number one soon, as well as the growth of like Anchor on Terra, and the emergence of liquid staking platforms across most POS networks. I would love to hear from you. How do you think like that's going to be impacting lending markets, and what does that really mean from a risk perspective? Like, how should users really be thinking about that? Maybe we can start with Wesso on that one, and then we'll come to Sean and then James.
Sure. Yeah. I mean, I think Sean touched a little bit upon it, but you generally, if you want to participate in like the validation and you don't have enough, funds to run your own validator, and you want to delegate or lock your funds. So I mean, that was the biggest problem that Lido solved for ETH, was you have to go ahead and like lock this ETH, right? And then you kind of don't have access to that ETH. So now you have this like liquid version, staked ETH, and you can go ahead and then trade it and utilize those funds, and then you can use it for staking. You can get rewards, and so I think now we're starting to see this on a bunch of different networks. And I think BNB Chain has the same opportunity, but it's basically being able to commit your funds to help delegate or validate the network, and then now you have this like tradable liquid version that you can go and do a whole bunch of things with, and you could still utilize it or get out of the position without having to be stuck in a locked position. So we're seeing a lot of, I think, just not when it comes to like delegating or staking to like a validator, or like doing it for like that network purpose, but even like protocols that have some sort of like locking mechanism, where you have to lock up your tokens in order to gain a certain benefit or reward. We're seeing a lot of protocols actually like develop liquid staking versions so that you can lock your tokens, then still have access and be able to get out of like a tradable position without having to like sit for 4 years in your locked assets. So it's becoming more and more prevalent, and I think there's going to be more and more like integrations, especially with like lending platforms. I mean, there's no reason if we develop a really secure like version of like liquid staking BNB, it can't be used as collateral, or we can figure that out. So I think we're talking a little bit about cross-chain. This is something I think is really exciting. I think we're getting more opportunities to develop like cross-chain communication between contracts. So that'll open up the doors for us to do a lot more fun things in the DeFi side, as we can start communicating with our contracts on other chains, be it with the chain, on the origination chain. So there's more stuff I think that's going to happen, not just multi-chain, but like actually like cross-chain, which would be access to, more capital and be able to play in, like, let's say you're on BNB Chain and you want to play with an Avalanche without leaving BNB Chain. Those opportunities are coming. So it's really fun to see all these kind of products develop. Be developed and work with, and we're gonna start working on being able to develop some of those projects and work with a lot of the BNB protocols to help give them access to funds off different networks as well.
Yeah, just to continue on what Wesso was saying in terms of rebasing tokens with liquid staking, how that operates across different chains. One thing to think about, in the Ethereum ecosystem, staking for ETH2 and proof of stake there, that you're locking your tokens for, at this point, an indefinite period of time. And for some people, they've been staking for quite a while. Hopefully it'll be not too much longer, but different chains, obviously, proof of staking like that can be different timeframes in terms of how much the lockup is. Ethereum's the extreme with indefinite at this point. Avalanche is like a month, and then BNB most likely will be much shorter than that. But each of those variabilities adds a difference in security model in multiple ways. One would be just a pure security of staking itself. Is the validator that you're trusting actually trustworthy, or is there a mechanism around handling their validator node effective in terms of security as well? So that's one aspect that has to be considered of who you're choosing to do liquid staking with. The other is just financial risk. Obviously, on the Ethereum side, there's a much bigger financial risk right now in proof of stake staking with the validator, because the price of the derivative token, the liquid staking token, can vary from that underlying staked ETH much more than it might otherwise, because it's completely locked up. And so if you look at the price history of staked ETH and Ethereum for ETH2, you'll see some price deviations there, and that will probably start to converge as we get closer to the lockup period being up. But Avalanche has the same issue over a month of lockup period that also causes some financial risk with price deviation. BNB will probably have much less, but it'll probably have a little bit. So there's also that risk component you have to look at as that adds a little layer. So even though you're not leveraging up, even though you're utilizing your assets even more than they might have otherwise, by taking the derivative token and putting it to work at DeFi, there's that a little bit extra financial risk you have to consider. And as a lending platform, that's what we also do consider. That's why we're rethinking how we look at risk for these liquid staking tokens that we're going to be rolling out, how we look at how we build what we call the rebasing version of our own derivative token for supplied collateral. We have to rethink how we engineer that to make sure it's secure as well, because that underlying token is gaining value, and we need to. There's different ways to engineer the representation of that gain in value, and so that also needs to be secure. So there's a lot of different areas that don't think about it until you get to the details here, but I think it'll add a lot of value to people in the ecosystem once we bring this out.
The peg risk is real, right? But,
yes, yeah.
I mean, it's kind of when we've been working through different products, it's why I think like redemption is actually important. So, whether there's some sort of like model you can actually build out where you have some sort of a pool so that there's redeemability for the underlying asset, gives a little bit of that like peg pressure off, because if it's 100% locked and there's no redemption, that's exactly what you see. Is you see peg risk start to happen, because as people start leaving their positions, the only way to do that is to sell the asset. And so, and then, as a lending protocol, you have to have good oracles for the actual asset stuff. You rely on the underlying oracle in order to maintain price, because it's just going to deviate.
Yeah, super interesting to understand a little bit more perspective from how you guys are thinking about the risk parameters for these derivative assets compared to the native from a lending protocol perspective. Maybe we can talk a little bit as well about how we're seeing things evolving on the multi-chain and cross-chain side. I think we start to hear like cross-chain and multi-chain a little bit interchangeably now, although there's probably a bit of difference in between the terms. But I think Wes, the point that you mentioned was I think something that a lot of people are increasingly excited about today, especially now we've seen the super high profile launch of Layer 0, and they're going to be joining us on a future session as well, where we start to have this real cross-chain messaging infrastructure that can be done at reasonable cost and is increasingly efficient. Would love to hear from you guys about how are you guys thinking about the development and evolution of this multi-chain and cross-chain DeFi landscape, and how we're and kind of like where you think we're headed with that.
Yeah, I mean, so we recently launched on Phantom as our second chain, and I think that it's becoming easier to do this kind of thing sort of in a safe way. I think with regards to what you were talking about, like RVB3 has kind of an interesting answer to this with their portals. From my understanding of it, essentially V3 allows like these governance approved bridges to burn tokens on the source network and then whilst instantly minting them on the destination network. So I think that this is what's going to continue to happen as infrastructure develops. You know, if you look at the bridges such as Hop and Synapse, I think it's just going to continue happening, right? So yeah, with the portals mechanism, I think is really interesting, sort of allowing these bridges to have access to credit lines, which can then be used to facilitate these cross-chain transactions when there's insufficient liquidity on sort of the native bridge protocol. And again, I think there's a few different solutions being worked on out there, and you know, we can kind of see where this is going. And it's just going to allow for greater capital efficiency across the board, greater liquidity, and greater composability.
Yeah, I always worry about the. I mean, if you need the information to go from one network to the other, it's probably pretty important information, right? So I guess that was always my fear is like, okay, well, we're developing this and we've seen a lot of issues with bridges already. You know, is the information going to be secure enough? And so I think, you know, that's what we're going to kind of have to see is like now this new infrastructure gets launched and is utilized is, you know, how secure is the data that's being sent from one network to the other? Because that's going to mean everything. If you can manipulate that data piece, you know, you're going to have a lot of problems. So, you know, we're keeping a watchful eye on all these new like product launches and how they're kind of operating and if there's any sort of issues that come up. But I mean, the freedom to be able to like, you know, talk to other contracts on other chains is just going to like totally ignite the creativity for all these developers to work on new products, because there's just so many things we can do across all the different networks, especially with the explosion of capital we've seen in the other networks. I mean, I think like a year and a half ago, it was like, you know, there was a couple Beyond ETH that were, you know, actually had some, you know, TVL in them. And that's like, I don't know, 2030. I feels like there's going to be another 2030 here in the next 6 months. So it'll be very interesting to see how everything kind of progresses along.
I think one key area to think about, and I think Aave's done an amazing job, innovative job of what they've built so far, but I think the future for cross-chain work is open standards. So I think one thing to look out for is both open standards in terms of how things are wrapped cross-chain, but then also consensus on the use of certain wrapped tokens cross-chain. I think that will greatly increase capital efficiency. Right now, there's a lot of friction between different types of assets, depending on which bridge you go over and you know, what the mechanism they use is, and some are more secure in terms of a pure security level or not, like Wesley was talking about. But I think just in terms of capital efficiency, the future really is, like we've seen with the general internet evolution over the last few decades, is a really open standard focus so that we can all talk together in a capital efficient way. And I think that'll be just a natural. We're so financially focused on blockchain right now that I think that the natural pressure to reduce friction and increase capital efficiency will force us to go to more open standards.
Yeah, definitely. I think it's super exciting times, like as we see these new types of bridge and cross-chain messaging infrastructures get more and more battle tested, and then see new types of applications being developed using these technologies underneath. Definitely very exciting times for the DeFi ecosystem. We're just coming up to the end of the time, so thank you guys for your time. Highly appreciate you joining us, to sharing your insights, and look forward to welcome you guys on to a future session soon.
It's been fun. Thanks, Sammy.
Thanks, everyone.
Thanks a lot, guys. Bye.
Bye.
Hey, welcome back, everyone. So we got our next panel starting. We're going to be talking about a topic that has a lot of people's interest. It is talking about institutional DeFi. So here we're going to get into understanding a little bit more about what it really means. Who are the key market participants? What are some of the emerging trends that are happening in that space? For those of you also joining us, we had the first of the giveaway QRs. So you need to use just a normal camera on the QR. So in case you missed the first one, don't worry. There's two more coming up in the later in the day. So we're just gonna bring in our guests for this panel, and we'll have a round of introductions. We've got guests from Binance Labs, as well as Venus and Tranches joining us as well. So, hey, welcome, guys. Maybe we can have a quick round of intros. We could start with Danny. Danny, welcome, sir. How are you? Please tell us a little bit about yourselves and Tranches.
Hey, Sammy, thanks for having me here. I wanted to say, before this start, I saw the awesome animation. That was very good job done. I was very impressed. Yeah. So anyway, just a quick introduction. This is Danny Chong, co-founder of Tranches. We are a structured asset tracking protocol with varied risk returns for users of different risk appetites. And we are on BNB Chain.
Awesome. Welcome, sir. Hey, Brad, how's it going? Background looks great. Real or...
It's a real background, unless I'm in the Matrix. I'm not sure. Great to be here with you again, Sammy. Hey, Danny. Hey, Nicole.
Hey.
My name's Brad. I head up the team behind Venus Protocol. Venus Protocol is the biggest lending protocol on BNB Chain. So definitely very excited to be here talking about the future of institutional DeFi with everybody. Looking forward to an interesting discussion.
Awesome. And we've got Nicole from the Binance Labs team. Welcome, Nicole.
Thank you, Sammy. Yeah, I actually just got COVID, so my voice is very funny. But thank you for having me. And we're from Binance Labs perspective, we've been working really closely with the BNB Chain ecosystem. We got a lot of portfolio companies from ecosystem, including Tranches. We have been really proud of their development so far. Yeah, I'm very excited to share more about this FutureFi sector.
Awesome. Thanks a lot for joining us, Nicole. Wish you a speedy recovery. Let's get into it. So I think we've been hearing a lot about institutional DeFi. I think there probably isn't a very good, or there's maybe multiple meanings for what institutional DeFi really is. It's like some people describe it as like a permissioned and compliance-driven DeFi. Others are talking about other types of market participants there, like you've got like the more DeFi native financial institutions like your crypto quant funds and Others today, you got like guys in between, the ones like, I don't know, MicroStrategy, MacroStrategy, guys that are today have like large amounts of crypto on their balance sheet. And then on the other end of the spectrum is like more traditional banks who are just starting to do like, or at maybe different stages of like research and understanding. So maybe the question I'll put to you, Brad, is like, how would you categorize or define institutional DeFi, as well as like who are the main market participants there?
Yeah, I think it's a good question. I mean, do we have a singular definition of this? But since we're here to talk about the future of institutional DeFi, it's important to level set, right? So when we think about institutional players, these are people that are operating in a group. These are people that make a profession out of trading or lending or any kind of financial services, right? So it could be banks. Could be investment bankers, all kinds of bankers, of course. It could be family offices. But these are people that work together in teams. They're not individual traders. They're handling massive amounts of liquidity, tens of millions of dollars, depending on who you talk to. Maybe they don't consider that massive, but for most of us, it's a lot of money. And so, when we look at some of the past events before we look forward, when we go back and we look at DeFi Summer 2020, that of course was powered in part by institutional adoption, right? So it's nothing new. It's been here. It continues to grow. And one study that I read recently said that 30% of investors are currently using DeFi in as far as institutional participants go, and another 40% plan to do so within 6 months. So the growth is going to continue to expand, of course, and that's why we're here talking about it. But in terms of your question, there's going to be growth from all of these different segments of institutional, because it's a big umbrella, right? So all of the funds, all of the banks, when we think about the market segmentation, are coming in, and me myself at Venus, I feel that impact, because we're being approached by institutions, large and small, to have conversations about what the benefits of DeFi mean for them. So there's, even though there's been a lot of people, a lot of institutions hopping in, there's still a lot of education and a lot of kind of research and homework to be done on the part of these institutions to understand, what does it really mean for them, right? We have still such a long way to go when you consider that there's $200 billion in DeFi. That's 10x from 2 years ago. In another 2 years, that could easily be 2 trillion, if not more. They're projecting $1 trillion to be onboarded in 5 years. In some other studies, but I think that's a huge underestimation. So I'm curious to hear from the rest of the panel what their predictions are. But yeah. So I would say that that's how I'm broadly thinking about the institutional landscape right now.
Awesome. Maybe I'll ask Nicole. I know that you're regularly speaking with like the best builder teams there are in DeFi and in crypto generally. What are you hearing from them in terms of like growth and interest in institutional DeFi participation? Is it real? Is it happening? How much does that growth and landscape look like?
Yeah, sure, Sammy. I think as far as I know, it's still, I would say institutional DeFi is still at its very much infancy. The reason being, we still don't have a proper way to make sure the AML KYC process is properly done in the DeFi scenario. Like, for example, if you're trying to go cross-chain, right, can you make sure your counterparty is not some source of fund which is under sanction? This is still a huge issue for us to resolve currently. Although, right, this is actually, I would say, progressing really fast. We have seen a lot of projects working on decentralized KYC. Even though, right, like you still keep part of the information to yourself, but then this kind of KYC or partially KYC format can very effectively prevent some of the EU behaviors. So I would say, right, like the future is really great, and we see a great upside. We also see projects who who are trying to, pick up the previous atomic swap concept to make sure, right, the counterparty is well KYC'd, just to, help institutional money get into DeFi. So yeah, I would say moving forward, there's a huge upside, but now we don't see a very effective way for institutional to participate in DeFi directly. Nonetheless, of course, you can actually participate I would say like this kind of staking, this kind of yield farming process through centralized platforms. But other than that, I don't see much going on.
Yeah, I think it's some interesting points here. Like there's some like fundamental requirements from a technology and infrastructure perspective required to really enable like growth of institutional DeFi. Like custody is one of them. I think also institutions are today learning how to think about and understand DeFi risk compared to the other types of asset classes that they're more familiar with. And then of course the KYC compliance related issues as well. I was mentioning before that, like for any of the public chains, an address is just can belong to an individual, can belong to a group of individuals, a bot, an AI. It's difficult to tell, but today we do see like teams that are working on identity construct and infrastructure in a privacy preserving way as well, so that you do have the ability to have these kind of permission lending pools that are kind of different, segregated, separate from today's like the Venus pools and others, but these are coming soon. So Danny, interested to hear from you, like how do you see the current landscape and how is it really evolving from the types of funds or others that you guys are speaking to?
Well, first of all, I guess like just now Brett had also mentioned like kind of the DeFi players that we are seeing on the institutional basis, right? So if we can also look at where we are now, we have of institutional players who are of crypto origins, and these are the specialized people who looks at youth farming, and they actually kind of like gather funds, or even it could be investments from high net worth themselves to go straight into like DeFi farming. And these are the group of people that has already been DeFi native for the longest time, right? But these are kind of like what I call the old DeFi setup, and they are the new hybrids which will help to bridge between what DeFi is offering and as well as what get TradFi into the picture, right? And these are the hybrids setup that we are beginning to see more. The likes of even where Binance custody is trying to go into, right? Basically being that intermediary that will be doing KYC, allowing institutional from traditional of traditional nature, be it the AMs, hedge funds, family offices, or EMs, and will directly be able to allow them to go into the DeFi protocols. I mean, these guys, they probably don't want to be doing a lot of the compounding, the staking themselves. And so the intermediaries not only does help them enter into DeFi, but also will help them manage this part of things. And for the TradFi guys, they will see proper accounting, and actually this is what they need. There are proper statements of accounts and stuff. So now these are the growth of kind of like a hybrids that I'll see that I think will be coming pretty strongly and developing in the next few months or years to come. They are much needed because TradFi nature can only deal with kind of like institution that's KYC approved by regulators, and also at the same time help them get access to DeFi. Now, obviously, the third rising one, which just now Nicole has said as well, I think they are still finding it very difficult to enter into the world of DeFi, given like the fact that it's nameless, the fact that you don't do your necessary KYC. But this is also changing, and I think where we see this change coming from is from the fact that more and more people, first of all, are coming into crypto. It's a ratio number, right? I mean, like if there's more people coming into crypto, the number of the DeFi users will definitely be rising from the fact that there are knowledge sharing and there's getting to know more about crypto as time passes. Now, where this is, we can see like development going very strongly. You can see even that, for example, KPMG in Canada, they are starting to have 1% of their balance sheet going into crypto. You can see the traditional fund, the very, very old types, be it Fidelity, Bank of New York and stuff, they are already investing into crypto and also even allowing crypto services to their clients. I think this is the first part. We have to understand that the rite of passage is that you have to go through understanding broad-based crypto before you can go into DeFi. I would say that the initial jump or getting traditional institutions to go from traditional banking, financial products and straight into DeFi, I think that's a very tall order. We have to allow the natural rite of passage for them to get used to crypto, understanding from a CX perspective before they can go into DeFi.
Yeah, I like that framing a lot because it, and we see that happening today, right? So we do see we hear about these large some publicly listed companies and other types like KPMG or whoever else that are like starting to get crypto on their balance sheet as kind of the first step. And even that, I think, is quite a big jump for them from, you know, what their kind of current comfort and stuff like that are, even on the infrastructure and risk management and other types of criteria. Just get crypto on the balance sheet is quite a big step, but to start doing things in DeFi is like many steps away, like in terms of ramping up on the infrastructure side, on their risk evaluation and control, and so many other things. And I think even DeFi today is like at a kind of quite early stages in its own maturity to really have any kind of meaningful participation from kind of like more legacy or traditional financial institutions. Brad, would love to hear from you on like how do you guys think about, like, from product development perspective, meeting some of these needs to kind of increase the participation of quite broad kind of diverse range of institutions in firstly in crypto and then more in DeFi as well.
Yeah, so I think about the opportunities here in two areas. So first, new products. So in product, you know, we can call these unrealized needs because customers don't know they need them yet because they've never existed. So like entirely new offerings, right? And we can mean things like, for example, flash loans in being adopted by institutional finance. So, you know, for us in DeFi, it's mind-blowing that these things are not only possibilities, but have been realized. It's one of the most interesting things of our industry, right? That you can execute self-paying loans in one transaction. For institutions that are already, you know, sitting atop trillions of dollars under management, there's a different mindset about adopting something like that, right? That's an entirely new way of doing something. So it may be a harder sell. My prediction is that, you know, this new category of products is going to take more time to adopt. So I'm not sure when you're going to see flash loans being done at JP Morgan. Then we have product improvements, which are basically, you know, what most of IT is about. So, you know, DeFi is infrastructure. I come from an infrastructure and banking background, and the focus in the work has always been making things faster, making it cheaper, right? So enabling, you know, that unlocked value gives us cost savings, and that can be passed along to people in the form of yield. So in DeFi, you know, you can do that across the board because financial services is powered by infrastructure. And now we have DeFi to come in and disintermediate and remove layers of work through all of this automation made possible by smart contracts and blockchain, right? So this is like the level of education that we have to bring to institutions because they're still wrapping their heads around what's possible with DeFi. So it's going to drive out a lot of redundancy, manual process, chair swiveling, cross-checking, all these terms that veterans of working at big banks know and hate. So my prediction on this one is that, you know, in this opportunity area, DeFi is going to get absorbed a lot faster by institutions where there's a clear-cut case for cost savings and for efficiency. So one area you can think about this being applied is in, let's say, like debt repossession, where, you know, the settlements are always like overnight at least. Now you can think about them being done intraday, right? So things will be executed faster because you're just removing layers of work. And we haven't even tapped into discussions really on how DeFi can remake investment banking. So a lot of investment banking is about underwriting, right? Underwriting bonds. So if you streamline that process, now the institutions that are swimming with a lot more digital assets in their portfolios, like we've been talking about here, they can use that. They can use their real world assets that are being collateralized in DeFi to underwrite bonds a lot faster with less people involved. So imagine underwriting bonds that can take weeks in seconds, right? So DeFi can have a hand in that. But yeah, we've called out some of the concerns about the range of solutions on the market. Nicole said there's not much that you can do right now, and some of the gap is in the tooling. But I think it's just a matter of time till all that gets solved for, and we kind of open up all of these use cases and possibilities to adoption.
Super interesting perspectives. Nicole, I think one of the other areas is quite interesting to think about how it might play out is in the area of governance. Right? So for today, we do see in some protocols like Compound where they have one or two super large stakeholders that kind of are very, very influential in the governance of the protocol. But as we see more adoption and increased participation from institutional players in the DeFi space, I think how those power balance will play out could be quite interesting, but also what's the type of governance participation that we might expect from different types of institutions. I think some we could expect will have like more hands-off approach where others may be much more actively involved, especially around areas related to like the risk parameters and other things like that they'll be quite concerned with. Just interested to hear from you, like how do you see kind of like the implications on the governance side for DeFi protocols that are also looking at developing products for the institutional markets? Do you think they'd have like need to have like kind of different governance structures or kind of like how do you think that might evolve and play out?
Like I think my personal belief for the reason for the success for DeFi is because of its truly decentralized. Like even though there are some power players in certain protocols, I don't think it's a forever sort of landscape. I would say users, right? They wouldn't feel right to have one or two parties monopolying a very strong project. So this process will grow more dynamic in a way, right? Because everything is open source, right? Like if your project cannot stay decentralized enough for every user to, or majority of the users to have a voice, it will kind of flow, like your TVL users probably flow to others. This is also one of the reasons we kind of advise our potential pipeline, right? Like a lot of them probably have a huge like allocation from one or two investor. And for us, to be honest, we don't think it makes sense because simply having a few individuals having too much power of one project doesn't necessary to guarantee you to have a safer kind of future, right? We still want this world to be more decentralized, to be more user focused. So in terms of like how the projects or like how the institutions, right, like put up their saying in certain kind of projects. I think it doesn't have to be like the previous Web2 version. Because a lot of times, right, like you've got to let the market decide what is the right direction. Like a few examples, right? Like for Ribbon Finance, for example, right? Its TVL and its fully diluted market cap is probably four or five times difference. This means the market really crave a project like this. So a lot of times, right, like you see these kind of indicators, you listen to the voice of the crowd is probably better than yourself govern all the decision making of a project.
Yeah, if I can add, like to what like to what they have said just now. I guess before you can actually look at how it's going to evolve, how landscape is going to be, I think we can look at something very fundamental and simple. What does the world need, or what is mainstream looking for? I like from many years working in the financial industry, right? It's always one same thing, and I can say that in DeFi, because it's also still decentralized finance, people hunt for the same thing, the hunt of yield. So whichever place that can provide a yield that is attractive to the people, be it mainstream, be it DeFi native, the money will flow. And there will be an active interest to try and get over there at the fastest time possible. We look at now today, 10-year treasury yield is at 2.3%. If you put it in stablecoin into DeFi, it yields you like between 5 to 25%. That kind of pressure, that kind of like demand for it is very real. And in fact, I've been speaking to be it the likes of private banks, EMs, or like family offices. They are very interested in this. In fact, the asset managers some of them are already involved one way or other into investing in such high yield basis true to DeFi. And I think just now what Nicole, for example, mentioned about Ribbon, I think the fundamental business model of Ribbon is basically optionality and their option vaults. This is again something that is very familiar with, identified by traditional banking or even players all around that's well invested into the world of finance, which is DCD or dual currency deposit. Basically selling option and get higher yield. So if you can look at the whole setup, is also very yield driven. So if we can identify, first of all, this is the demand, and we continue to work on basically getting the yield being delivered to end users in a KYC manner. And you mentioned also permission DeFi. That would be something that shorten the route of how we're going to deliver the world of DeFi into institution and into the rest of the world.
Yeah, you touched upon a lot of interesting points here, Danny. I will also ask you, to maybe go a little bit further and say, what are the biggest priorities you see, here in terms of kind of barriers for? You mentioned there's a lot of these asset managers and others that see these kind of attractive stablecoin yields in DeFi, but we see maybe some of that is kind of trickling into DeFi today, but probably there's a huge amount of that is still kind of remains to be untapped. But wanted to kind of understand what's the biggest challenges that needs to be addressed there to really unlock that large liquidity from those asset managers and others in order to come and be able to more meaningfully participate in these stablecoin yields in DeFi.
I think this one is very clear to everyone that speaks to investors. You can see that there's a very huge knowledge base gap for people from TradFi. I think mostly now they are aroused by the other colleagues or people that they know looking into crypto and DeFi, and they're starting to wake up and say, oh, I need to look at this. In fact, I have calls from friends from TradFi that says, hey, Danny, can you help me out explaining a bit of the basics to me and stuff? So I tried my best, but you can see that at this point, a lot of them are just starting to come in. And without a proper education or kind of a knowledge to get through to these people who are only familiar with traditional finance methods, it's going to be a hard struggle. And if you convince kind of the portfolio managers, traders to be able to deal with this, you still need to convince compliance, risk managers, the whole firm to basically look at this. I think a huge increase in knowledge base and a very real movement to get from top down, from institution themselves, maybe from even regulatory kind of a dimension to basically get knowledge up is actually helping. Obviously, us being involved in DeFi protocols, we are also doing our part to make sure documentations or even doing YouTube videos to make sure that people who are interested, are keen to know, can start from the basics and able to leverage up in a very short pace of time. I think there's hope because DeFi obviously is evolving a lot faster than traditional finance. And we definitely can see how finance have evolved over the last 20 years, maybe compressed into a couple of years in the world of DeFi. And I also mentioned just now, right, compliance. But this also has to do with the fact that there's more education and has to be a top-down kind of like firm direction to say that we need to look at crypto, we need to look at DeFi. And from the institutional side, it will be easy to move along things. But again, we have seen a couple of more forward-thinking leaders from banks, from asset managers already doing this, but not everyone shares the same thought. This can be improved, and I guess that's a major hurdle. Also on the DeFi side, we all know there's always a security issue. I think this is on us. We need to ensure that, be it the chain, be it also on protocol, we need to convince the traditional finance or mainstream people that we are doing our part to ensure that security is tip-top. There's no chance for being compromised, and the number of hacks is actually being lowered day by day. These are the kind of things that I guess people want to look at. In traditional finance, you talk about, like you're doing a bank account transfer and you're getting hacked. That's mission impossible. But it's happening today in the world of DeFi. I think that's really how you need to convince people on things are improving and is ready for institutional adoption. I guess now also in terms of yield farming, there are uncertain returns. For me, I also mentioned that you should start looking at stablecoin investment. That, if in terms of hurdle, would be already a very big step for traditional finance to be able to step into. Yet it's something that they can relate to because it's similar to a bond investment in the sense that, you get yield by putting in to a certain place and you get return, but at a higher credit risk as compared to putting in money into the US Treasury. I think that kind of like will be the first step for most traditional finance to go into, and I think it will also be helping most firms in various departments easiest to understand and get what is yield farming or getting extra dividend per year as associated with DeFi.
Yeah, thanks a lot. That's a really interesting insights there. I think especially the point which you mentioned about the need for educating stakeholders in some of these traditional finance and kind of like legacy finance institutions. But what we see happening is that a lot of the people that are kind of becoming and developing their expertise on DeFi, leaving the TradFi space and going to work full time in DeFi. So we definitely need like a lot more people and support on kind of sharing more perspectives and expertise around what's happening in the DeFi ecosystem. We're just coming up to the end of the time. I wanted to thank you guys. Highly appreciate you taking time out from your schedules to come in here and share your perspectives with our audience. And special thanks to Nicole as well. Know that you're not feeling well. Thanks a lot for joining us and wish you a speedy recovery.
Quick, I just want to do a quick shameless plug. If you're out there and you want to get into DeFi, Venus Protocol's hiring, come find us on Twitter. And also if you're a developer and you want to get your hands dirty, we have tons of bounties on the BNB Hackathon right now. So go find them and participate. Thanks, Sam.
Oh, you steal everyone's line.
Thanks a lot, guys. Thanks. Have a great day.
See you.
Thanks, Sammy. Thanks, everyone. See you. Bye.
Bye. Hey everyone, welcome back. Thank you all for staying and joining us. So we've got a awesome session lined up here. We're going to be talking about retail DeFi, so DeFi for the masses and DeFi for the everyday users. For those of you that joined us on the panel before, we are talking about the growing interest in institutional participation in DeFi, but today we see that the DeFi landscape, both the TVL composition as well as the user base is largely made up of a retail user base. So we're going to talk a lot more about that. We will get started with a round of introductions. So would love to hear from a little bit about your guys' background and what you guys are focusing on at your respective companies and projects. Maybe we'll get started with Q1 from the Belt Finance team. Thanks for joining us.
Oh yeah, hi. I'm Q1 from Altis, which is the main developer of Belt Finance on BNB Chain. And Belt Finance was firstly designed as stable swap plus yield optimizer, and now we are focusing on high base yields of our boards and cross-chain swaps so that users can easily access to the yields from many other DeFi protocols and cross-chain liquidity. And yeah, so thanks for having me today here and in this great event.
Thanks for joining us. Pete,
Yeah.
welcome, sir.
Hey guys, thanks. It's great to be here. I'm Pete Mishahowski. I work on the venture capital team here at GSR. GSR is one of the largest global market makers in all of crypto, trading billions of dollars a day, mostly working with protocols, providing liquidity for tokens on centralized exchanges, although increasingly we've been a lot more active on-chain, providing liquidity and trading there as well. And so, yeah, I focus on the venture investment side of things, focusing on early stage investments, largely in DeFi, but we're pretty interested in all aspects of crypto. And yeah, really excited to be here and talk about retail DeFi.
Thanks for joining us, Pete. We've got Chef Icy with us as well. Hey, Chef, welcome.
Hello everyone, I'm Chef Icy. I'm a BD bunny from PancakeSwap, and we hope to be the one-stop shop for all things DeFi on BNB Smart Chain. So yeah, just a very brief intro, and we'll talk more about our platform and products later on in the discussion.
Awesome. Maybe Pete, the first question for you is, of course, like in the last year since maybe a little bit more than a year. So I think starting like summer 2020 when Compound kicked off the whole yield farming thing with the launch of the Comp token, we saw like just massive growth in the DeFi ecosystem across pretty much all the metrics, right? Like I think throughout 2020, the TVL was really like growing at a very slow but steady pace, like slowly creeping like from $500 million to $1 billion over like a 6-month period. And then in 2020, we just saw this massive growth, this like huge explosion in not only TVL, but many new users. Of course, BNB Chain, PancakeSwap, Belt, and many other of the protocols on BNB Chain contributed massively towards that user growth for the first time, having this type of highly accessible infrastructure and DeFi protocols. But would love to hear from you. Like, what do you see as like the key drivers of this growth, and for like the regular user, like how do they end up like getting more interested in DeFi protocols? Like, what's the type of value that they're able to get from that?
Yeah. So I think the key driver, at least back then in 2020, was you had a confluence of sort of a number of protocols that, I mean, before 2020 DeFi summer, I think DeFi was still kind of like an idea, and there were a couple teams working on it, but it was still incredibly early. There weren't really that many products to use and that much of a reason to use them. And then, you know, once you had a couple of these protocols, Uniswap, Compound, Aave, a couple of these early, you know, synthetics, now we call them DeFi blue chips. Once they've gotten a little bit of traction, some products out there, a reason for people to use something on DeFi, and you combine that with, you know, a global pandemic where everyone got stuck inside and didn't have a whole lot to do, and in a lot of countries they also got sent, you know, money from their governments to sit inside and had some extra pocket change to play with. I think that was kind of you had those two things, and then Compound really kicked it off with sort of incentivizing usage, right? And then once you sort of had these three things, and you especially that third thing where once Compound and other projects started copying them of really getting users, incentivizing them to use things, yeah, that really just kind of lit a fire on DeFi and gave a lot of people a reason to sort of come into the space and try to play around and figure out a way to make money, frankly. And so I think that's still the major reason why I think retail users and most users come to DeFi. It's a way to save and invest, but also a way to try to make some money on what's a really early, fast growing space. And I think, yeah, that's still the case today. I think most retail users are coming in to try to find a way to invest and save a bit, but also there's plenty of opportunities to find an edge and to find some early projects with some traction and to make good investments that can provide a good return, as opposed to a lot of other asset classes out there in traditional finance where returns and yields are kind of not as attractive. And I expect that to continue.
Yeah, super interesting. I see Chef, I see a question for you. So, of course, like as the DeFi landscape and ecosystem continues to evolve, we see a lot of new types of products being created, a lot of innovation happening around product design. And even at PancakeSwap, we've seen PancakeSwap develop continuously since its launch, offering many new products, like recently launched the perpetuals, like limit orders, just constantly developing new things in the chef kitchen. So was curious to learn from you, like how do you guys think about that kind of product development roadmap and prioritization, especially considering that PancakeSwap is the largest number of users among any DeFi application. So as like a very large and kind of diverse user base as well. So and of course, like today it's already like a very comprehensive set of products, like across predictions, the syrup pools and farms, IFOs, and so many things. How do you guys really think about that product development roadmap and prioritization, considering your user base?
Yeah, so actually my answer will piggyback off Pete's quite elegant answer as to why people come to DeFi. I think in addition to what he has raised, a big element is the social aspect, especially for some geographies and some networks. This is not just Twitter and Telegram, but from their friends, from their coworkers. So I think recognizing that potential on-ramp is quite important for us. So that starts at the beginning when we're building our user base. And so when we think about what we do in terms of our product development to rolling it out to iteration, yeah, my answer is super boring. I think so. Two main things. So one thing again is our community and responding to their requests, and of course responding to those requests not just 100%, but also with our own technical expertise. And the second thing is to optimize towards growing the ecosystem. So I think while we do have some friendly competition in the BNB smart chain, I think the important thing is that we all are better off when we grow the ecosystem. And so these are the two main things that we optimize towards that define our product roadmap to development to iteration to basically actually our strategy actually.
It's awesome. I think you touched a couple of really interesting points there. Like one is, I think, the power of community within DeFi as a kind of driving force of like not only about like user retention, but also user growth, right? Like the power of memes in DeFi is real. And we definitely see that. But I think another point that you touched upon is also quite interesting about competition. So the question for Q1 is how do you see competition among DeFi platforms, and what do you think that they are competing for, if anything? Is there this kind of like zero-sum situation happening, or is it because that pie is like still limited in some ways, both in terms of like total number of users or TVL, or do you see it more as like growing the pie?
Oh yeah, so I think there are two main types of competition in the DeFi market. The first one is competition to secure on-chain liquidity, and the second one is the governance competition to get some form of solid community support in the community-based DeFi. So the current DeFi ecosystem has grown around the liquidity providers as they are key players. And in the case of retail DeFi platforms, they seem to have competed to provide a sustainable interest rate or yields by improving their tokenomics. So, and I believe the primary benefit of DeFi platform is their permissionlessness. It means anyone can use them and no single body controls them. So a decentralized community called DAO is a necessary concept in DeFi. And a DAO has its rules of operation encoded in smart contract that determine who can execute what behavior or upgrade. So DAO is essential for the proper growth and development of the DeFi protocol and has been advanced in various ways, such as close linkage with tokenomics to take governance and difference of other protocols. So to wrap up, they competed, or DeFi protocols competed for liquidity first to get more high liquidity or get high TVL. And to secure on-chain liquidity, they get some differentiation from their governance and tokenomics. So think positively by competing each other. Diversity in the governance and tokenomics can exist nowadays, even though there are many protocols with us just similar format, like AMM or lending or any other aggregators. Yeah, so governance and liquidity competition are the biggest thing in the DeFi markets, I believe.
Awesome. Thanks a lot for sharing that perspective. So Pete, I think I'm sure you being on the ventures team at GSR gets to really see the bleeding edge of innovation happening in the DeFi space by the best builder teams in the space. So we'd love to hear from you more about what are the kind of emerging growth areas that you're most excited about within the DeFi landscape.
Yeah, I would. There's a couple of ways I could go with that, but I would totally agree with QN, except I would almost put it, one way to frame it is I think a lot of teams are competing for current DeFi users, the current DeFi degen, and then I think there's another class of protocol that's competing to try to expand the pie and to create products that will bring in new users to DeFi, right? And I think that's quite interesting, especially that second category. And so in that second category, I would put in things that, there's a couple different things there, but one of them is I think it's pretty clear that we're going to be in a multi-chain world. So protocols that make it very easy from a user experience perspective to kind of interact with multiple chains and use multiple chains. That's quite an interesting area where there's a lot of very interesting development and interesting teams building there. And also, I think there's been a lot of hype around crypto gaming and NFTs and metaverse, and there's obviously a lot of noise and hype, and there's a lot of scams and frauds in there, but there's also a lot of real innovation happening. And I think it's pretty clear to me that frankly, my wife, my parents don't care that much about finance. My friends, not all of them care that much about DeFi, but a lot of them play lots of games and care about consumer products, care about social experiences. And so I think it's very likely that, the next product that's going to bring in, the next wave of 10 million, 100 million users will be some sort of social consumer or gaming application. And I think what's interesting about crypto and DeFi is that there's not really a clear divide between metaverse, NFT, crypto gaming, and DeFi. If you have a crypto gaming asset, you may want to rent that out, or you may want to borrow against it, or you may want to trade it. And those are all DeFi actions. And those were all, all those different things will plug into DeFi so that people can kind of leverage these assets from different ecosystems and sectors, and you'll use your gaming assets for multiple different things. And so I think, those are a couple of the sectors that I'm really following closely, these metaverse and crypto gaming sectors. And there's the intersection there between DeFi is also quite interesting. So, I'm spending a lot of time looking at things that allow you to kind of get liquidity from your NFTs, or places that allow you to sort of, rent out your productive crypto gaming assets and these kinds of things, guilds, all that kind of stuff. So there's plenty of innovation happening, but I'm pretty sure that it's going to be, applications that are a little bit less sort of finance focused and a little bit more sort of consumer social sort of focused. That's probably going to bring in the next, huge wave of users would be my guess. Yeah.
Yeah, very interesting. I do see that as well, that maybe a lot of the DeFi constructs like AMM dexes and lending and borrowing and others will be foundational infrastructure for metaverse, SocialFi, GameFi projects, and probably has gaming maybe has a much clearer pathway to hundreds of millions or even a billion users compared to, let's just say, like like more DeFi applications. But a lot of those gaming and metaverse and other types of projects would leverage DeFi applications underneath, but maybe just in a more ubiquitous way, where it just happens inside the game or inside the metaverse experience. That's super interesting. Maybe we can also talk a little bit more about risk for users as well, and how users should be thinking about risk, evaluating risk, what's the type of risk controls, and how they can really mitigate risk as well. So maybe I'll put that question to Q1 first. Question being like, how do users evaluate and mitigate their risk in interacting with and using DeFi protocols?
Yeah, so from the user's point of view, I think there are likely to be three types of risks, excluding legal or external risks. The first one will be price fluctuation as they are investing in crypto. And the second one is protocol risk according to the nature of the protocol, such as AMM or lending. And third one will be governance risk. But at this time, I'd like to point the second one out to you guys. The protocol risk may arise in AMM protocols, such as in AMM protocols. Slippage or impermanent loss can be crucial to the investors or users. High slippage conditions in liquidity pools can force users to pay extremely high fees to remove liquidity supplied to a protocol. And in the lending protocols, such as Venus, liquidation is a kind of mechanism that maintains the lending market's collateralization at appropriate levels. So to reduce these protocol risks, users need to know their investment tendencies. Since the protocol risk in DeFi is transferred from the risk that has been controlled by the centralized entity for a while. So users must be able to manage their investment, and they have to know their investment tendencies. So basically, if you want to reduce protocol risk, such as slippage or IL, users need to expand their crypto investment with stable values as much as possible, like stable coins. So yeah, so I'd like to point the protocol risk is very crucial one in the DeFi market for the just retail users.
It's very interesting insight. So definitely like a lot of new dimensions of risk for users that are maybe new to DeFi to understand well before they start investing larger amounts of capital in these DeFi protocols. Chef, I'll do a similar question to you. So how would you advise new users to think about risk as well as like risk evaluation and how to like manage and control and mitigate these risks as well?
Yes, I think K1 came from quite a good like bird's eye view. I think about risk with respect to the user as a subject. So I think there's two main risks. So besides, as K1 mentioned, the legal tax related risks, two main risks. So the first risk would be technical information asymmetry. So it's not just the lack of smart contract knowledge, but it's things like I mean, I probably shouldn't admit this, but I don't check every like MetaMask like transaction hex data when I click accept. So I think that there's still quite a gap with regards to that. So that's the first risk. The second risk would be a risk based on capital asymmetry. So for example, it is not uncommon for large players to move markets, especially when the volume on depth isn't that great. And so, for example, they interact with one another. So a new user coming to DeFi might get shielded a certain project. There might be a coordinated fund, and like they might buy into the token. So I think with these two main risks, I think it comes with education. So, and I think there's a few good YouTube channels, there's a few good Twitter users, but I think the most important thing is to learn by trial and error. So I would recommend users to get a fresh wallet, or even go to a testnet. I think BNB Chain has a great testnet. Get some BNB faucet, play around with the different protocols, explore what the different kind of interactions and intricacies you can have with different products, and just start from there. So I think that would be my take on it.
Awesome. Thanks a lot for sharing that Chef IC. Pete, maybe we'll switch gears. I got another question for you. So if we think about we already mentioned there's been like very significant growth in the last year, plus around like TVL, new users, and other metrics as well. But if we need to go from where we are now to have like significantly unlocked like the next big wave of liquidity that takes us from like whatever the total TVL of DeFi is now, I think is somewhere close to like 250 or 230 billion, but take us to $1 trillion, and then also more than 4x the number of users that are currently participating in DeFi. What do you think could be the key drivers for that, as well as the key current challenges and limitations that are kind of like preventing that growth from happening? Like, what are those challenges that need to be like resolved?
Yeah, I mean, there are a bunch of things here, but I think the main thing that I would point out is just the user experience, the user interfaces in DeFi, frankly, are just not where they need to be if you want to have hundreds of millions or billions of users. Like today, the most popular, I mean, even things like fees and transaction speeds, which obviously BNB Chain has done a lot to sort of improve that side of the user experience. But even when you just look at the most popular wallet today, like MetaMask, it's really impossible for me to imagine a world where we have hundreds of millions or billions of users that are all sort of transacting through MetaMask and setting their gas fees and like dealing with these transaction confirmation times and managing their private keys. All these kinds of things are just, frankly, for a lot of people, even friends of mine that I would consider, fairly sophisticated, it's intimidating, it's scary to have all of your money kind of sitting in these wallets and stuff like that. And so I think, there's a bunch of things that need to be built in DeFi, but the big one is just better and simpler user experience, stuff that's more familiar to Web2 users, stuff where you can sign in with an email or a phone number, stuff that kind of secures your private key in a much easier way that makes it easier to restore it. And like I said, to me, I envision a world where it's pretty clear we're going to have multiple chains, and you need a kind of abstraction layer for users, because at the end of the day, you don't care what protocol, you don't care that you're using TCP/IP or whatever, like. And I think it'll be the same way 5 years from now. I think users won't really know or care which chain they're using. They're just going to want to take the action that they're taking. And all of that stuff needs to be abstracted away from the user. If we're going to get to hundreds of millions or billions of users, it just needs to be, it just needs to be much, much better from a user experience perspective, I think.
Yeah, I definitely hear you on that one. I think like the user experience is getting better, but it's still today, I think, can be quite an intimidating experience for new users, especially the fact of self-custody, where you don't really have anywhere to go if something goes wrong. Like if you get phished, which can happen, like some of these phishing sites are just quite common and like look authentic, and for new users make a mistake, and that can lead to, of course, like permanent loss of the assets that cannot be recovered. So there's like that aspect around the user experience. There's also, I guess, like other parts about how users get the assets on chain, how to even access dashboards around the asset management, trying to understand like even things like what Q1 mentioned, like permanent loss risk, like how to really calculate that or quantify that. Like today, the tools to make that like easily accessible or understandable, emerging, but I think still at the early stages. Q1, do you have anything to add on this particular point around like what are the key issues and challenges you see about how to really grow the next wave of users and liquidity on DeFi?
Oh yeah, so I think the most significant difficulty in activating DeFi is regulation. I also like agree with the point of that Pete mentioned just before. Yeah, so user experience is very important because DeFi is still very difficult to enjoy for the retail users, but people are starting and developing themselves to adopt them because blockchain and crypto are leading to change the world, and DeFi is making paradigm shift in the finance market. So I think the most significant difficulty in activating DeFi is regulation, I believe. So, for example, like a kind of travel rule, it can lead to restriction on on-chain liquidity supply. In particular, in the case of Korea, recent attempts have been made to limit withdrawals from centralized exchange to individual wallets like MetaMask. This is a structure in which liquidity channels are blocked and fodder for DeFi growth and retail users access. So therefore, as we are the DeFi protocol developers, we must present the relationship between blockchain and crypto and why crypto should be used on-chain to the market and persuade them and the importance of DeFi in the blockchain world. Yeah, that's my point of view. Yeah.
Thanks, Q1. Chef Icy, do you have any points you'd like to add here, like on the key challenges that you see that will that could be addressed to really unlock the next wave of large liquidity and user growth in DeFi?
Yeah, so I think two main things that also piggybacks off Pete and Q1's answers. So I think the first thing that Pete was talking about is that ease of use. So I think, having a DeFi money labels is one thing, but having the proper front end for it is also a second thing. So I think there's a bit of improvement on this. There's much more elegant SDKs, and importantly for both desktop and also mobile. So yeah, having code is just code without users. So making sure that users can use all these codes, DeFi Legos, I think that's important. I think developers are starting to recognize that. I think a bit of the, I guess I wouldn't say arrogance, but that like sort of Puritan view towards code is I think developers recognize that they need to be a bit more proletariat. So I think that's one thing that needs to be fixed, which I think is starting to be fixed. The second thing which K1 talked about was about regulation. I mean, as they say, you can't run away from death and the tax man. So I think having clarity on tax is super important. And even in developed countries where the history of fairly clear regulation on certain financial matters with regards to crypto is still, fairly uncertain. I guess, with the UK, the news just a few hours ago and yesterday, there's so much, changes in approach. So I think having clarity on that and having that trickle down to having clarity on taxes is pretty important. I think having those few crypto tax tools that are coming up, those are also important. So yeah, those are just my quick 2 cents on those two.
Thanks a lot, Chef Icy. So I see we're just coming up to the end of our time on this session. Wanted to share a big thank you for you guys, all of you taking time out to join us on this panel, as well as sharing awesome insights on this topic. Thank you. Thanks a lot, guys.
Thanks.
All right.
Thanks.
Yeah, thanks, everyone. Good discussion.
Thanks, bye.
Bye.
Hi, good morning, good afternoon, good evening, everyone. Welcome back to FutureFi. So the next panel is going to be DeFi 2.0 on derivatives. I would love to bring up the panelists here. So my name is Gwen and I'm from BNB Chain Fund. I have with me here 3 fabulous panelists who will be talking us through their products, their dApps, and the world of derivatives, crypto derivatives. So we have Catherine here from Apollo X, Jay from MCDEX, and Dev from Dairy Protocol. Are you in the room? And I see no videos. Am I the only one with video? Can you unmute, please?
Yeah, I'm here.
Okay, you're here,
Hi,
you're here.
Brendan.
All right,
Hi.
perfect. Oh, hi, Dev. Great. Everyone is like pseudo anon. Gosh, I'm the only one. Okay, right. Okay, cool. So thank you everyone for joining us. So let's go around the table first, and I would love for each of you to just briefly introduce your name, what you do at your product, your dApp, and what do you do? What does your project do? We can start with Dev, please.
Hey guys, so this is Dave from Dairy Protocol. Basically, I head BD at Dairy Protocol. Dairy Protocol is an all-in-one derivative solution on BSC currently. We have perpetual futures, everlasting options, and power futures currently. Yep.
Thank you so much, Dev. Catherine of Apollo X.
Yeah, sure. So hi everyone. This is Catherine. I'm the growth lead at Apollo X. For those who are not familiar with us, Apollo X is the world's first centralized and decentralized hybrid crypto derivatives exchange. We offer various futures contracts with deep liquidity and up to 100 times leverage. I'm very pleased to be invited into this DeFi derivative session. Hope to have a fun and a fruitful conversation.
Thank you so much, Catherine. Excited to have you here as well. Jay from MCDEX.
Hey guys, hey Gwendolyn, nice to be here. I'm Jay, the head of communications at MCDEX. And we're actually the first fully permissionless DEX for trading perpetual contracts. And one upcoming sneak peek that we have for everyone is that we're actually launching our V4. That will actually have the multi-collateral and the cross-margin function, as well as like multi-chain deployment. So that's something actually the entire team is very excited about as well.
Congrats, Jay. So when is V4 launching? Are we talking like tomorrow or like next month?
Yeah, we're actually thinking of launching it as soon as the contracts are audited. So that's in the process, and we should be able to launch by late this month or early next month.
Okay. Soon. Very, very awesome. Okay, very cool. So to kick us off, right? Let's just give an overview about derivatives. So we've seen derivatives kind of really pick up over the last several months, last year or so, several months especially. We'd love if someone here could give us an overview of the derivatives market. Would anyone like to volunteer? No one? Dev? Yes, please.
Yeah.
Thank you. Yeah.
So derivatives are basically very critical to any financial system, because financial systems are basically made out of financial markets, and financial markets is all about risk. So every single transaction that takes place comes with an element of risk. So professional market players, market participants, traders, banks, investment firms, everybody wants to offset and hedge these risks in order to prevent any disaster or anything that could happen to their portfolio. So that's why, going back to the derivatives, that there are multiple products that exist currently, and they derive value from the underlying assets. So that could be anything from commodities, interest rates, cryptocurrencies, everything out there.
Thank you, Dev. So for those of you who come from traditional finance, you will be familiar with a lot of these terms, right? And when we talk about crypto derivatives, we are seeing elements of that coming in. And so the larger question then is that, is the derivatives market moving towards just exporting a lot of TradFi, traditional finance, into this market? What do you think, Jay or Catherine? Is it just about just copying and pasting TradFi?
Actually, I think there are many differences between DeFi and TradFi. One of which is that actually DeFi gives users more flexibility and control over their own assets and funds. And also, there's no intermediaries on DeFi. That would mean DeFi actually has a lower cost altogether as well.
So then
Yeah.
talking about, go ahead. Yes, Jay.
Yeah, sorry to interrupt. So I think just one point to add is that um you know, for derivatives to be available in the traditional finance space, there has to be like a market maker. The token has to go through a few kind of KYC and due diligence before they can be listed. But for DeFi, what's so powerful about it is that anything can actually be a derivative, and it is permissionless in a sense that anything can be traded as long as there's a demand and someone creates a pool for it. So I think the whole permissionless feature of DeFi actually makes derivatives a lot more I would say attractive to retail users, so they can actually trade anything they want, not just be able to trade the very popular tokens that are listed in, let's say, Binance and things like that. So yeah.
Actually, that's a great point, right? So I like that you're saying that it's as long as anything can be traded. I think that's one of the key points you just made, right, Jay? So when you talk about that, trading anything you want, you talk specifically about retail users. So what do you think retail users want? And when you talk about trading anything they want, what are some of the things that crypto derivatives allow them to trade that's again not available? What is anything?
Yeah,
Examples?
so in crypto there are a lot of narratives and tokens that often get the kind of hype like within a week, and then because it takes some time before they can actually be listed on centralized exchanges. So I think that's where DeFi actually has like an edge over centralized exchanges, just because by just having like a trustworthy source, they can actually just open a pool and just allow everyone to trade on it. So I think just because crypto is so fast paced and narratives are constantly changing, whenever there's an opportunity, perpetual swap protocols like MCDEX, we can actually just launch a pool and allow everyone to trade on it. Yeah.
Cool. So kind of let's go on to, the kind of the target audience, right? Because again, Jay, you mentioned like retail users. So when we talk about derivatives markets now, are all three of you, are you seeing, what's the breakdown between retail and institutional users that you're seeing on your various platforms? And then what are the different kind of use cases that they want, the differences and similarities? Anyone can start. Anyone can unmute. Dev?
Yeah, sure. So basically, currently in the crypto space, at least, I'll just go across options. For example, options is a very unique derivative product that most people within the space are quite familiar with. But in TradFi, for example, the volumes of options that are traded is almost 35% of regular spot volumes, whereas in crypto it's only 2% of the regular spot volume. So that's the contrast right now, and that's where retail and institutions are entering and realizing that there is a lot of growth potential in this, and that's where they're coming and using the platform and figuring out how to use these crypto options, because they are quite unique compared to regular options that they currently find on TradFi. And as DeFi is borderless, people that have never actually traded crypto derivatives before are learning about this and have never are learning TradFi options using crypto options. So they might trade crypto options in the first stage and then probably experiment on TradFi.
And when you talk about this, are there differences between retail and institutional, or is it just volume play?
It's just more or less volume play and strategies that they might use, because like a normal institution, they might have a $50 million portfolio. So to hedge that, obviously they have to implement different kind of strategies and always be on the lookout for the next move and what's the next play. Whereas the retail user, he's just more concerned of his capital, and if if he has to cut it, he'll just cut it at a stop loss.
Yeah, and earlier, Dev, you mentioned the word risk, right? It's all about risk, right? So when if let's say an institutional user, they come in with a much larger AUM, right, much larger portfolio of monies to kind of play around with, are you seeing that their strategy is to take more risk then, or they take less risk, but because they have volume, they can then thereby make more, take more leverage, for example? Go ahead.
It's a bit of both, I would say. They don't want to take on too much risk on chain, primarily within the DeFi space, because smart contract vulnerabilities and different kind of elements like the scalability, and there should be a counterparty who's ready to trade with them. That's where it stands on the on-chain side of it. But because they're entering the space with such a great AUM, they are looking for all kinds of solutions. So that could be DeFi, that could be CDFi, that could be anyone out there that is ready to take the opposite side of their trade.
Actually, that's a great point. You mentioned CDFi, right? So when we talk about just DeFi in general, some people think that the world will be entirely DeFi. Some think it's going to mix of CDFi. So Catherine, I would love your point of view here, right? Because it's CDFi, or how do you see this crypto derivatives world? Are you seeing, because you CDFi, you have more adoption or less adoption?
I think that depends on the users. Some users don't really feel comfortable using DeFi because it's for some users it's still a pretty new concept to them. They are still more used to centralized DeFi. So for those kind of users, they would still prefer centralized DeFi. But for mature users, I would think DeFi would be their better choice, as it's completely anonymous. It's all on chain. Yeah.
So that's an interesting thing. You're talking about maturity, right? So that's like comfort level, I guess, and I guess how crypto native, crypto savvy you are, right? So kind of let's talk about risks now in terms of from the user perspective, right? How are users mitigating derivative risks? Jay, maybe? Oh yeah, Catherine, go ahead, please. Go ahead, Catherine.
Actually, I think for users, there are definitely some ways for them to mitigate risk. Firstly, they need to take the time to do their own research and to know more about the products they are investing in. Secondly, for derivatives, because it has leverage, right? So users would be understanding leverage very well, and that even though gains are multiplied by the leverage they use, losses are also amplified as well. So that's something that users have to keep in mind before they actually start their futures trading or derivatives trading. Then based on their strategy or risk appetite, also knowledge, they have to choose leverage that best suits their needs.
So this leverage risk is not just in crypto derivatives. It's not just in crypto. It exists also in TradFi, right? So what is the additional? Are there additional specific to DeFi risks here?
For DeFi, I think users can actually mitigate the risk by determining where to set their stop loss. And based on what we observe, a lot of the new users, they are not fully aware of the advantages of stop loss order and other advanced order types like stop loss or take profit, etc. I think that's pretty unique for DeFi.
Go ahead, Jay.
Yeah, and just one point to add, I think Catherine covered a lot about the risk, especially the product risk of derivatives. But I think what is unique to DeFi is that, like what I mentioned, everything is based on a smart contract. It can be permissionless, as long as the community wants to have a pool, if there's demand, it can be traded. So one large risk is, what if the token, let's say, is a fake token? It's a token created like just having a very similar name, but it's a different contract. So I think in order to mitigate such risk, protocols like ourselves, Dairy, Apollo X, and MCDEX will have to step up the governance game, and because the governance will be able to vote for such pools, and more importantly, verify these pools to make sure that they are safe to trade before retail users should have access to them. So even though we say that yes, everything is permissionless, everything can be done as long as there's demand, there's still some security risk there, which can be mitigated if there is a very effective governance in each of these protocols.
I love that point, right? So when you talk about the fake token example and governance component where people are voting, can you give me an exact example? Because we don't want the public to be verifying as well, right? That okay, this is the correct token, because if you have a lot of people saying that this is the correct one, but actually it's a fake one, then you're also going nowhere. So how are you doing that exactly?
Yeah, so one possible way we can do it is that the voters, basically they are token holders in most governance platforms. So the voters, they have the largest stake in the protocol, and that actually creates an incentive for them to truly verify the security of these tokens before they simply vote. Because let's say if you leave that voting power to everyone, everyone is just going to vote according to majority, right? They're probably not going to do much due diligence. But if the voters are actually token holders, which they are incentivized to, vote for the right pools, because it actually the protocol security actually depends on it. I think that actually will incentivize them to make the right decisions.
Yeah, but
So
so Jay, I'm gonna push that a bit, right? So what if I'm a bad actor, right? And I buy a lot of your tokens, and therefore I have very large voting power, and I purposely then vote for a fake token.
Yeah. So in that case, usually for most governance, the team wouldn't get involved, but because the team ourselves will hold a large stake of the tokens as well, just based on the team's allocation, as well as the investors and things like that. So that can be mitigated. So even though, we are not 100% decentralized now, so there's actually the team that acts as like a watchdog to make sure that this does not happen. But in a case where it is fully decentralized, I think in that case, DeFi will actually have to trust the integrity of the token holders to make the right decisions. And if, let's say, if someone has a large enough stake to, steer the kind of voting power, I think collectively as a community, they still have the power to overturn such a malicious attempt. So yeah, I think that's just the beauty, the beauty of DeFi.
Actually, so that's interesting, right? So let's kind of go to that topic about governance and DAOs. So and then again the track of like fully DeFi wall, and then the CDeFi component, right? Jay, I mean, we heard Catherine a little bit earlier on the CDeFi side of things. For you, Jay, like, you talked about the permissionless and you love that. Are you for 100% decentralized world in the world of derivatives particularly?
Yeah, I think that's a great question, Gwendolyn. Currently, I do not think that we are mature enough as, an industry to have 100% decentralized organization. But I do strongly believe that we should decentralize as the whole ecosystem matures. So now I feel that for a DAO to be, very effective, the core team still has to be involved. The core investors still have to be involved. But as the whole ecosystem and the project matures, that's when we can slowly decentralize and just let go. Because there are more and more community members who are actually very committed to the protocol. But at the very start, I think in order to first build that strong community, the team and core investors do have to be involved. I hope that answered your question.
I appreciate your point of view. Dev, what's your point of view from Derry's perspective? Because you're also a DEX.
Yeah, I mean, I fully agree with Jay over here. It's just that they can't be a fully operational DAO currently because we are still innovating at the back, right? We still have to launch new products, new solutions, new pools every single day for people to come out and use the platform. Whereas if it's a fully decentralized DAO, people are not motivated enough to come and do that right now.
Okay.
So
go ahead.
Yeah, so I mean, there's a lot of things that we can do in the DAO, but I mean, at a later stage, I feel that talent, like there's an exodus of talent happening right now from TradFi, so people are eventually coming into the space, and I feel a lot of these guys will find a project that they like and eventually be a bigger part of this DAO, this so-called talent, and over time these product CEOs will have to let go and give more authority to the DAOs to also work behind the scenes and not only have voting power.
Let's go to Catherine, right? In terms of kind of the building perspective, I want to link this point about kind of having that core team, to make some decisions, as both Jay and Dev has kind of talked about. So Catherine, as you're building up your centralized part as well as the decentralized part, how are you thinking about decision making and as well decision making within a core team, and especially for the DEX component, how much are you then getting the community to partake in it?
Actually, from our for us, right, we do listen to our community feedbacks. We like on a daily basis, we look at what our users want. So recently, we actually listed 10 plus or 20 plus futures contract on the platform because our users are like saying, okay, we want more contracts on the platform, so we offer them more.
Where are they saying this? Where are they saying this? It's
not
in
our community.
Like
within
Discord
the
or something?
Telegram communities.
Telegram, yeah,
so
exactly.
Discord
So
and
it's,
Telegram.
Yeah, so it's not yet in a formalized voting mechanism, right?
Yeah.
Okay.
Right.
Continue. Yeah.
Yeah. To your point, there's no formalized way for people to vote for things. So I think that's where DAO would come into place. Actually, that's something that we are also thinking of. So right now, especially for us, our community is extremely important to us. They actually play a large role in determining what we launch next, what we want to focus on, and more importantly, their feedback would always help us to improve our experience for our users. Then for DAO, right, as I mentioned, that's something we are actually thinking of. And we believe a DAO would play an important role in the next generation of DeFi derivatives, since we all agree that communities' needs are the best heard and understood by none other than themselves.
Okay, but then I think all of you also kind of said like maturity matters, right? So Catherine, you talked about kind of few new features. So let's jump to the topic, right? So for all three of you right now, I would love to understand. I know Jay, you talked about V4 soon, next month or so, right? But kind of what are in DeFi derivatives as a category, right? What are some of the cool stuff that's happening that it's super new, super innovative right now in the market, as well as what your project is working on? Catherine, please go ahead. You can start first.
Okay, so for us, right, we actually offered a few new products just in the month of March. We actually launched some NFT games or GameFi on top of the DeFi that we offer to our users, which is like an expansion of our product offerings. Also, we actually, besides futures trading, we also offer spot trading to our users. Other than that, we actually support ETH chain on our DEX, so that we are actually a multi-chain system for our DEX. So we are constantly improving our products to offer more services and offerings to our users.
Okay, cool. Thank you. And so Jay, so tell us more about V4 and how it differs from V3.
Yeah, so for V3, the the application was mainly built on BNB as well as Arbitrum. So for V4, what's interesting is that we are gonna actually be multi-chain. So we are trying to aggregate the liquidity across chains so that people, instead of trading perpetuals on, let's say, BSC and Arbitrum, they can just go on one platform and be able to trade tokens on all these different chains. So I think that's something really exciting, because this doesn't require users to bridge from chain to chain just so that they want to experience derivatives on different chains. I think this kind of solution is probably quite an efficient one for users. They do not have to spend so much in gas fees moving forward, and that's why we're actually extremely excited to launch this V4 that could help to for us, optimistically, we hope to change the game when V4 launches.
Awesome. And so for Dev, what is Dairy Protocol innovating in, but also then larger, what are some innovations you're seeing in the industry?
For sure. So with Dairy, currently we just launched a V3 a few months ago. So we had a partnership with Venus Protocol. So basically what happens with Venus Protocol is all of the funds that are currently stored in Venus can be used as margin within our protocol. So Venus currently supports 15 base tokens. So people can have Venus token and open a BTC USD position, a BNB USD position within Dairy Protocol. So that allows capital efficiency. So we also have an everlasting options product. So basically, it doesn't have an expiry as such. So if you decide to, if you're bullish on Bitcoin, for example, and you eventually feel that Bitcoin is going to hit 100K, so you can buy the 100K call and keep it open. It doesn't have an expiry date like the rest of the option markets. So this was an innovative thing that we caught on from the team at Paradigm. So similarly, within the space, we have noticed that people are following a lot of Paradigm products. So one of them currently being power perpetuals. So that basically is a bit unique in the sense that, like for example, the ETH price, it's no longer just using a 2x leverage. We are using the ETH square. So that's like $3,500 times 3,500. So that allows for more upside potential, and the downside is a lot lower because we're just using a 2x leverage. So it's not a fully mature product yet, and we don't have a lot of users yet, only because it's a bit complicated and not that simple as perpetual futures. So a lot of new dexes within the space are also trying to do the same and trying to make it simpler for the regular DeFi user.
Awesome. So we just have like under a minute left. I would just close up in terms of partnership, right? So Dev, you mentioned Dairy is working with Venus, which is great. So I'd love to kind of talk about what are some of the partnership opportunities that you see in the space, and I would love for all of you to maybe just keep it just very short. Maybe we can start with Jay.
Yeah, I think in terms of partnerships, but because we are actually going to more like a multi-chain deployment, so partnerships with many L1s to us makes a lot of sense, and I think for many protocols who wish to go multi-chain as well. So yeah, that's the kind of partnerships that we are seeking moving forward.
Got it. And Dev?
Yeah, I mean, lending protocols, borrowing protocols, I mean, these are the best case scenarios for users because they're all interested in APYs. So yeah, that's the best part for DeFi.
That's true. Catherine, you closing us off?
I think both of them have discussed pretty much most of it. I don't have any further comments on that.
Awesome. Okay, cool. So thank you so much, everyone, for listening. We'll come to the end of this short panel discussion on derivatives as part of FutureFi. So thank you so much again, Jay from MCDEX, Catherine from Apollo X, Dev from Dairy Protocol. My name is Gwen from BNB Chain Fund. Thank you and enjoy the rest of the event.
Thank you. Bye, guys. Don't
Thank
get
you.
liquidated.
Thanks, guys.
Bye-bye.
welcome back to FutureFi. So this panel discussion now is titled Beyond Bridging, Maximizing Capital Efficiency. We have here three amazing panelists, at least I hope they will be amazing. Okay, we have Brian from Layer Zero, we have Mustard, Crypto Mustard from Multi-Chain, and Mo from Seller. Welcome, gentlemen. All right, so I love that. I think two of you have real names. Crypto Mustard has a nickname, but hi, Mustard. We'll go with Mustard, right?
Exactly. You can call me Mustard or
Mustard.
Pashka.
Okay, amazing. So Mustard, your audio is a little bit soft. Okay,
It's a bit soft.
Yeah, it's a little bit soft. You
Just a
speak louder, would be
second,
great.
let me slow it.
So what's fun fact is that Mustard and I just spoke at Binance Blockchain Week last week together at the same time. We also had an audio issue. But okay, hopefully that won't repeat on this stage. So kind of let us get started, right? So here we're talking about bridging. Over the last year or so, we've all seen, many bridges getting hacked. The latest one, as all of us know, the Ronin bridge. So when we talk about bridging and, the terms we've been using over the last a long time is as a multi-chain world and a cross-chain world, right? But at the same time, there are similarities as well as differences. So I'd love to kind of kick us off, right? What are the differences between multi-chain technologies and cross-chain technologies? Anyone can start. Brian, you unmuted yourself?
Yeah, sure. Happy to chat. So I think this post comes broadly from Vitalik's post, or this train of thought comes from Vitalik's post. It basically said the future, will be multi-chain but not cross-chain, meaning people will live on a lot of different chains, people will do things on a lot of different chains, but there'll be no communication channels between them. And the reason that Vitalik sort of thinks this was he has a fundamental aversion to sort of wrapped assets. Vitalik naturally thinks about the world in wrapped assets because he thinks about Ethereum, and there's never going to be a native contract that mints Ether on any other chain, right? It's always just going to be minted on Ethereum. And so any version of ETH on any other chain is naturally wrapped, right? And so the core issue with wrapped assets is when you bridge a wrapped asset, if you have, let's say, $10 billion of outflow from Ethereum to Solana, from Solana to Polygon, doesn't really matter, right? You have $10 billion of outflow from chain A to chain B. You will always have $10 billion of risk in perpetuity forever. So if the smart contracts are hacked, if the bridge is economically exploited, if the consensus mechanism fails, any of these things, that 10 billion will be permanently at risk. And so that's kind of for now, for things on the current scale, hundreds of millions, okay, maybe that's unacceptable. When you're talking about going into the future and it's tens of billions of dollars, hundreds of billions of dollars, it's not really an acceptable outcome. So, there are ways to mitigate this. There are ways to sort of do something different. So we launched Stargate 2 Thursdays ago.
So Brian, just as a quick one there, right? So then your point of view then, do you believe in a multi-chain world or cross-chain world?
I very much believe in both, but I think application architecture will need to change. So what I was talking about with Stargate, right, is you can take the same. So we launched Stargate 2 weeks ago. It's a native asset bridge. And effectively what is just pools on each chain. You add to one and subtract to the other. But what that allows you to do is kind of interesting because now you could have that same $10 billion of outflow from chain A to chain B. But you could do it on 2 pools of $100 million each, where you incentivize rebalancing, right? And you just have native assets on both sides. And now you could accomplish the same $10 billion of outflow without ever exceeding $200 million of total aggregate risk, right? So you're decreasing the attack surface by or the attack bounty by a factor of 50 or so. And I think the more the applications can design around this, the more the applications can do to not have permanent standing risk, the better off we'll be broadly. And I think a lot of things are going to move in that direction. So I think Vitalik's original qualm is largely with wrapped assets. And I think in time, the industry is going to shift from that.
Mustard, you unmuted yourself. I'm
Exactly.
looking at it as a queue. Please go ahead.
No, yeah, I mean, I also agree with Brian in the sense that wrapped assets can be a risk, but even when we're considering, I mean, multi-chain also has a native-to-native bridge, just like Seller. But even if we're talking about native-to-native, we always have the risk of any of the wrapped bridges. So, for example, if we're talking about the Avalanche bridge or the Polygon bridge failing, so in that situation, we're also talking about a wrap token per se. So we're also always at the risk of something going on with any of those bridges, not only our bridge per se.
Yeah. To be clear, Polygon and Avalanche, even though they're minting something that they consider canonical in their ecosystem, it's still very much a wrapped asset, right? Whereas like Stargate is actually pools of native on each chain. But I do think most people will move to native eventually anyways.
So risk will always exist, basically, right? So that's the point we're saying, right? So the question then is that how can we decrease it as much as possible with certain technologies, correct? Brian,
Sure. And
oh yeah, go ahead, Mo. Yeah.
Yeah, and I think like from a broader term, I very much agree with Mustard and Brian here. But also like just I think a lot of the recent nervousness about like cross chain really comes from like recent hacks of like what happens with the vulnerability discovered in certain protocols, or like Ronin get hacked like 600 million plus, and then wormhole 300 million plus. So like these kind of incidents tend to get people very nervous about like in general multi-chain kind of a security. But if we look into this, like these incidents are not really kind of a protocol level incidents. It's not like fault of what Vitalik mentioned about like canonical token bridges and the minting and these kind of things. They are just like smart contract hacks. So we believe there are a lot of different kind of mechanisms you can put in place to reduce the implementation and operational. Like for Ronin, it's actually an operational hack that like a risk in general for bridging systems when they're early, especially in the early stage, all the way to kind of a fully mature, like in the future with a kind of a fully decentralized set of operators, validators, or whatnot, like or various kind of decoupled structures there. So I think the entire cross-chain ecosystem is in very much a fast evolving pace right now. So like we shouldn't kind of see this as kind of a static and say, okay, this is all done and everything is going to be the same from like 3 years from now. No, it's not going to be like that. Right? So the entire industry is going to evolve around that, and we believe that there are a lot of best practices that can be done in the implementation, the operational side, like what we did in Setter to kind of prevent this kind of huge hacks from happening, basically.
I love that you divided that. Go ahead, Brian. Yeah.
I was just going to ask, would you not consider Poly Network and Ronin protocol level hacks? Like effectively was the consensus failing?
Yeah. I think for Poly Network and Ronin, I think these two can be definitely can be considered as protocol hacks. But for Wormhole, it's
Wormhole
kind of
was definitely just a smart contract. 100% agree. Yeah.
Yeah.
So when we talk about these levels of hacks, and Mo, you just said at Seller, then you're kind of thinking about it, right? And you kind of talk about it kind of broadly. I would love for you to give us some examples of how are you thinking about that and mitigating risks across these levels of failures, potential failure points.
Yeah, sure. Happy to talk a little bit more about that. So like, I think fundamentally for bridging systems, if we're looking at, I came from kind of a formal verification background. Now in formal verification, which is the security of, software programs, one important thing to define here is what is the invariant for your system, right? So like, what is the thing that is like basically, should be the policy that your system should operate under.
Do you say invariant?
Yeah, invariant, like system invariant.
Doesn't
basically.
change. Okay.
Yeah. So for bridges, the system state machine is not that complex, right? So like as Brian said, like if you're liquidity pool based bridges, you add something in and you withdraw something out. That's it. Like if you're withdrawing something out of the bridge, there must be something coming in. Like that's just as simple as that. It's the first kind of a state machine. There are of course the invariants about liquidity providers and all that stuff. So the most basic thing to do, first of all, is to have at least the monitoring of these invariants, continuous monitoring of these invariants in the bridging system, right? So like, let's say if there is any money goes out of the system, then there should be an independent system, effectively as a watchtower that is watching the entire system to ensure there are actually corresponding amount of money going into the system, so that we don't have this case where like there is a active hack that is happening, but like then after 6 days, you actually discover this. Right, so we don't have this kind of incidents. Now there are other kind of in protocol and implementation wise, protection that it can be built. For example, for large transactions, like very large transactions, we effectively we effectively revert to the path of optimistic rollup like approach, where you essentially have a two-step to send out any kind of a large transaction. This large can be defined arbitrarily. Once the first step is to basically commit on chain, saying that, okay, I want to send out this $10 million out of the network, and that message has to be committed on chain. Now, with that message on chain, every participant in the network can start to look at this and cross-check and verify that this is actually not violating the bridging invariant. And if there is anything that is wrong with this particular transaction, this transaction can be stopped in the flight without actually causing any harm. So this kind of protections, two-phase commit, which is a general kind of a principle in computer science, should be implemented and can be considered for many of the bridging systems in general. And we think like over time, this entire industry will evolve towards that direction to kind of have a set of best practices and in protocol and out of protocol designs to kind of prevent from these kind of 600 million, 300 million attacks.
Are most bridging and people not thinking about this two-phase commit? Mustard, how about you for multi-chain?
So in regards to that, I would like to add that another point that we feel is very important is obviously monitoring in the sense that, for example, one thing I talked about in the presentation we had in the Binance week was that we really need to be open source. We need to look into open sourceness. We need to look into having bounties that I see both Seller and Layer 0 also opened. And we need to have the help of scrutiny. So we need people to scrutinize from outside of the project, because in the end, we're fighting against hackers. It's better to get some hackers on our team and fighting with us against this sort of problems. And obviously, talking about monitoring, we also need to talk about monitoring the chains themselves, because we are at the risk of any chain having a certain problem. For example, if there's a reorg in a chain and the transaction has been made, for example, imagine a user sent $1 million in dollars, and then there's a certain reorg in the chain. You need to make sure that there's finality and that the transaction basically went from in the original chain, so that the bridge doesn't suffer a 1 million USD loss.
Go ahead, Brian.
Yeah, I was just going to say, I agree on the security side. Obviously, as you mentioned, we just announced last week, we're doing $30 million bug bounties, so 15 million for Stargate and 15 million for Layer 0. And I think it is absolutely, with everything that's happened recently, going to just be a huge theme in the industry to take, like, there is nothing, if you're in the space of interoperability, you can take more seriously than security. And I think everybody's sort of coming around to that, and everybody's putting better and better systems in place to incentivize those, to incentivize the right people, right? Like, we were egregiously on the side of just many audits, of the fact that, like, there are never too many, but ultimately it just, like, no audits are ever, it's just code at the end of the day, and nothing is perfect. And, like, you need a system that you're able to improve over time. You need validation methods you're able to improve over time. And I think, again, serious bug bounties in place relative to sort of what's being transacted is hugely important. So it's good to see the industry moving in that direction.
So let's talk about the validation methods that you just mentioned, right? Which kind of links to Mo's point of view, a point earlier. Do you have any kind of specific things that you're thinking about? Again, Brian, from the infrastructure operational side, not operational, infrastructure side of things, because Mo talked a lot about the computer science point of view.
Yeah. So I think there's like a little bit of decoupling there, right? The validation method is effectively, how do you take some piece of state data and validate it on chain B? This is something that, like, ZKP could be useful. So people are doing, like, state proof generation. This can be something right now people use TSS. There's, like, a bunch of different ways that you could do this to say, hey, we have some piece of state, and, like, we are going to wait some period of time for probabilistic finality, and then we're going to verify that the state, the thing we're passing in the destination chain is the thing that came from source chain, right? So, like, that's what's happening in state validation. And there's a bunch of different ways to do that. What Mo's talking about more is sort of like the operational infrastructure side. So you have these people, whether it's a TSS, whatever it is, somebody is passing the state from chain A to chain B, and then you have some external parties. So we just published this thing called pre-crime, which is effectively that. There's two things. One, two pieces of it. The first piece was basically not allowing external malicious contracts to interact with the contract on the other side. So we did that for Stargate. But the second is to actually locally run every single transaction prior to going. So when you have this transaction that's going to go through, you basically fork and locally run the entire instance of all chains and verify that it is a valid state or the expected state, and that it doesn't violate any of the invariants, as Mo says. So there's complete solvency. There's, everything that you would want sort of state to be, and any application can define what those pieces of state are. And so it runs that locally, and then assuming that that's locally, then it basically passes it on the destination chain. So that's what Mo was talking about is watchtowers that are effectively doing the same thing. They're saying, hey, does this break solvency? Is this a malicious packet that, hey, there wasn't actually money added on the source, but we're trying to allow it to go out on the destination, and allows them to effectively block this.
So kind of let's move forward, because like Mustard also brought up like bounties, right? And let's talk about, you mentioned there's a lot of stuff that still needs to be done. So let's talk concretely about that, right? What things are missing right now in this cross-chain ecosystem?
I mean, for me personally, I think one is application level design. I think applications will ultimately come up with their own implementations of circuit breakers or security at the application level to sort of reduce the entire threshold of risk. And the other is just better validation libraries. Like ultimately it comes down to a problem of like, I have a message and you're 100 kilometers away. Like I want to send you a message, but I need to send messengers. Like how can I make sure that you on the other side, like know that the message is authentic, right? And like there's a problem that's been trying to be solved in the internet world for like an extremely long time, and in many other areas. So it's more just like continuous progress on that front in terms of what are the most both secure and cost-efficient ways of validating state.
And one potential future that we are also exploring is that whether it is possible to have a more collaborative future for bridging and messaging systems and interoperability platforms as well. Right, so like whether it is possible to not shoulder risks for each other, but instead enhance security for each other in this entire kind of a bridging space, right? So like one proposal that we made for UST recently, and also many other different protocols recently is for creating this kind of a multi-bridge compatible message passing layer where the application developers doesn't have to be tied to one messaging protocols or kind of interoperability protocols, but have the capability to utilize multiple as they want, and at the same time have enhanced security instead of like the reduced security by having all of these kind of a multi-chain ecosystems actually start to monitor each other and become each other's watchtower. Is something that we're kind of exploring and see whether we can get some feedback or from the industry and from the users, and that's also a direction that we can explore.
Can you share a little bit more about that? What does it mean? Are you talking to what kind of other projects are you talking to?
Yeah, so like the simplest term for this is like there are some cases where there are still canonical token bridges or mint and burn bridges that need it. Right, so for a ecosystem that is without a canonical token bridge or native canonical token bridges, now the problem about that is like in the past, most of the project has only been relying on one bridge. Then that means that this entire bridge is shouldering the entire risk of the protocol, right? So like, and you really cannot very easily just add multiple bridges into this, right? Because like if you have just multiple bridges, it means like double risk instead of like a single piece of risk. Now, how to do this is to have kind of a multiple bridges that start to monitor each other in this kind of optimistic rollup fashion, where each of the bridge minting process can be, a optimistic rollup like a two-phase commit, essentially, and each of the bridge can be the monitor of all the other bridges in the system. So essentially, we'll be able to build this kind of a canonical bridge ecosystem where you have multiple bridges collectively acting as the official canonical token bridges. Even in the case of there won't be any kind of a canonical token bridges for certain ecosystems. And then with that, on top of that, you can have liquidity pool based bridges to kind of increase the speed and all that stuff. So so that's the direction that we're also kind of talking to and thinking about. Of course, there are a lot of things need to be done, a lot of collaboration need to happen in that direction. But like in general, we are taking a very collaborative approach in this space.
So,
Yeah.
go ahead,
Yeah.
Master.
I agree completely with Mo on this. I mean, we've been cooperating with several projects. I mean, we're giving the ownership of several tokens to the projects themselves, and in the end, we're very much pushing this together with Seller, that is also pushing this one about multiple minters in a certain token, multiple minters in a certain bridge. So, for example, if with Seller, we launched now Conflux co-minting. And our final objective is to basically take away this fractionality. So all the liquidity is very fractionalized at the moment, and we want to diminish that. And this is one way that we see going forward that will help in that.
So let's kind of shift tack from a user experience perspective, right? How the user experience right now, it's not so great, right? So what are we doing collectively as an industry now to improve this user experience, and then hopefully to improve security as well?
So yeah, I mean, as at multi-chain, we believe that in the end, the best way to solve this problem is not us directly. We believe we want to be a set of tools that projects themselves and apps themselves are going to basically use in their backend. So we want to be this backbone of cross-chain interoperability. So for example, we believe that a project should have a specialized bridge. For example, imagine SpookySwap or SpiritSwap, they're Phantom dexes, correct? So they use our bridge on the back end, and they specialize and they just integrate the part that's related to Phantom. Or for example, if we're talking about Moonbeam, we have StellarSwap, BeamSwap that use our bridge in their back end. In that case, they'll only integrate the bridging that is related to Moonbeam. In the future, we'll see much so we will see much more like that. So we'll see applications that use our bridge and backend, being it for cross-chain messaging, being it for NFT bridging, being it for any types of token bridging, but specialized for whatever the user is looking forward. So yeah, I mean, in the future, for sure, we believe that cross-chain won't depend. So for example, a user could use an app and be using cross-chain without knowing that they're using cross-chain. So yeah, in the end, for sure, the way going forward is better and simpler UI and easier to use UI.
You know, just to kind of add on top of that, like right now, the usability problem or UX problem right now is because that we don't have a lot of this kind of interchain or cross-chain paradigm designed for the applications, right? So like today, very much, you know, for this multi-chain application, multi-chain deployed applications, users are essentially using the same copies of application just like cross-chain. They need to manually move their fund. They need to kind of, you know, switch to a different chains and all that stuff. Now, all of three of us here are trying to change that, right? So like we're trying to basically see whether this is possible to, you know, allow a user just having like the Amazon-like experience where they just like click a button and some service from some other chain will be shipped to them effectively without they going out and kind of drive themselves there and kind of you know go to that store and stuff like that. So you know, this kind of a one-click user experience from anywhere to use any different applications is something I think like the interoperability space is collectively shooting for. And we think like that's not just at least you know, we as Seller think that you know message passing is going to be an enabler for that, but there are a lot of kind of a developer paradigms or like you know kind of a design patterns that need to be built around this, like you know, for cross-chain governances, for cross-chain swaps, you know, for cross-chain NFTs. You know, I think we're all not only just trying to build the fundamental message passing layer, but also trying to provide some more design patterns to the community so that they know, okay, this is like how you can build an application that is you know a kind of a cross-chain native with a more native cross-chain experiences, basically.
I mean, there's something that all three of you kind of touched upon, right? I mean, Brian, you mentioned application level design, right, earlier as well. So I would love to kind of understand from you, just the last 5 minutes that we have on this panel right now, is that what's the most difficult thing that all of you are tackling right now in your projects, Brian?
I think the most difficult thing by far for everybody is just creating like again, I think it's better systems around the validation library. I think we've talked about it a lot that like we don't believe that any method for validation right now will be the methodology for validation 5 or 10 years from now. Like we just don't think we're there. I think most of our effort goes into making those systems sort of better, more secure, more efficient. I think those are the hardest problems within the industry to solve. The smart contract side of things, that's interesting. The core components and the base stuff is interesting, but ultimately I think that is the hardest problem to be solved.
Thank you, Brian. Mo? Yeah.
Yeah, I think like on top of that, of course, that is super important. But on top of that, there is also kind of the process of building this new paradigm, right? So like the people and the application developers has been thinking about like I'm building on one chain, but like now we're trying to kind of push towards the direction where the application developers are thinking about state and state communication and asynchronize the cross-chain function calls across multiple chains. Now, to build that application in a very smooth user experience and also of course, a super secure way, it requires like a lot of effort in this industry collectively with us, with like application developers to build out these patterns. And however, once these patterns are built, we effectively can harvest the scalability that is brought by the huge kind of a multi-chain expansion right now, right? So like we can actually start to sustain 10 million users, 10 million daily active user on the entire blockchain ecosystem as a whole, instead of just looking at one blockchain and saying that, okay, this is like where the blockchain application can go. That's just 1 million daily active user, and beyond that, it's kind of everyone's breaking. So like that's, I think, where we're all trying to push forward to kind of enabling this kind of stitching all the parallel pieces together to almost like having a multi-core future for the entire blockchain ecosystem.
Yeah,
Thanks,
I agree completely with Mo. So yeah, I have this theory that, and we at Multichain have this theory that one chain doing 1 million transactions is harder than 100 chains doing 10,000 transactions. So yeah, we believe that at the moment the biggest challenge is that most chains are still, even though we're in a much better position than we were before, we are still in a point where most applications are isolated in a certain chain, or a certain liquidity pool is isolated, and liquidity is spread around all of these chains and still isolated in which one of them. And we believe that our objective now is to join them all together and to find a way to create basically a way to move information around, move value around without any friction. And that's where we're going for. That's what Multichain is going for, and all of you guys are going for too.
So actually, that's a great point, right, Master? So one of the kind of common things we're hearing also from kind of the audience is that, like, bridges is bridges, right? How are you really, really different? So I know we talk about a collaborative world, partnering with each other, you're talking to all of them, but I would love to kind of understand, maybe we can wrap this up, right? By all of you kind of talking about your project again, but also how are you different?
So yeah, I can start that. So I think multi-chain is we try to look into our competitors and see, okay, what do they do best and what do they do worse, and we try to take the best of both of them. So we try to look into Seller and see, okay, they're doing this correctly. So for example, they were working very well in terms of all of this canonical, this co-minting and the projects owning their own token part. And we think that we need to push this. If we're talking about layer 0, we're talking about all of this liquidity, about cross-chain messaging. We want to do this better than them, and that's what we're going for. We tend to compete and to become this backbone of cross-chain interoperability.
Thank you. Yeah, I just want to make it clear, gentlemen, like, this is more like, I don't want to pit you guys against each other, right? I just really want to hear like your different point of view, so to speak, yeah, on the world. Yeah, Mo or Brian? Mo? Yeah.
Sure, I can just like quickly 30 seconds here. That is like for us, we're not because like the beating heart of Seller is a blockchain itself. It's actually built by a Cosmos-based blockchain. So we view that for cross-chain in the future, it may not just be kind of a message from A going to B. There's a message from chain A to goes to chain B, but there can be some more interesting application built on top of this middle chain layer. right? So like you can have more message transformation, you have more global information taken into consideration, and that's something that we are kind of very excited about.
Thank you, Mo. Brian, closing us off.
Yeah, for our end, I think broadly, it was always like our earliest differentiator was that we focused on generic messaging when everyone else was focused on value transfer. I think early on, I think a lot of people have sort of come around to that. And then was just architecture design. We sort of didn't believe in the sort of, we didn't think light nodes were, excuse me, didn't think they were viable at the time in terms of a system that actually works. We didn't think middle chains had the right security model. And so ultimately we created this kind of new system of cross-referencing. We called an ultralight node. And I think that's been sort of a design decision that nobody else has replicated so far.
Very cool. Okay, thank you so much, everyone. Thank you, Brian from Layer Zero, Mustard from Multi-Chain, Mo from Seller. My name is Gwen from BNB Chain. BNB Chain Fun. Thank you and enjoy the rest of the event.
Thank you,
Thanks
Gwen.
so much, everyone.
Thanks, gents.
Thank you, guys.
Hey everyone, welcome back. So this session we're going to be talking about how to embark on DeFi. So this session is really intended for new users that maybe don't have a non-custodial wallet set up, or also want to know about how to get assets to the wallet. And then I'm going to share some useful websites to do that, to get your wallet set up, as well as to how to get your assets onto the wallet, and then how to explore different apps, as well as some really cool educational resources for new as well as for experienced users. So I'm just going to share my screen. Oops, it seems to have some issue here. Just hang on a second. Cool. So I think you guys should be able to see my screen, or my colleagues can add the screen sharing to the main screen. Here we go. So the first site I wanted to share with you guys is bnbchain.world. So if you head over to bnbchain.world, you'll have a lot of useful information. There's links to the DApp Explorer, as well as our blog site, the documentation site, and a bunch of other types of useful information. So you also have here a couple of key steps, especially useful for new users. So the first thing you want to do is download a wallet. So you have a number of wallets to choose from. There's the Binance wallet, which I'm going to install in a second, Trust Wallet, MetaMask, and many others. So if you could select any of these, so they all have kind of different features. But for the purpose of this demo, I'm going to use Binance Wallet. So if you click on Binance Wallet, it's going to open you another tab, which will take you to the Binance Wallet page, and you can see there's a number of browsers that are supported. So Binance Wallet extension, it's a browser-based, it's a browser extension wallet. So it is supported Chrome, Firefox, Brave, and Edge as well. And I'm using Chrome here. So if you click on the Chrome link, it's going to open another tab, which is the Chrome Web Store. So here you can see some more info about the Binance Wallet extension, and then you can click Add to Chrome. So when you click Add to Chrome, it's going to install the extension for you, and then you'll see it in your extension list. So there's a couple of important steps here as well when you want to install the wallet for the first time. Let me see if I can share. Because I'm sharing just the tab and not the full screen, you're not able to see that. But it's fine. I can explain to you some of the important info related to that. So when you open the extension wallet, you'll be able to see two options. So you can either import an existing wallet, or you can create a new wallet. I think one of the important steps when you're creating a new wallet is the security of your private key. So you'll generate, there's multiple steps that you need to go through. So the first step when you create a new wallet is going to give you a seed phrase. So that seed phrase is super important. You need to store it securely. So there's some best practices around how to generate the key securely, as well as store it securely throughout its life from the point of generation. So when you generate your seed phrase, the safest way to store it is write it down. It's a 12-word seed phrase, and you need to write it down in the exact order that you see it. So the sequential order of the words is also important. So write it down on a piece of paper, and then keep it in a safe or somewhere that only you have access to it, and you know it's going to be safely stored. Poor security practices. So I would advise against storing your seed phrase in a Google document, for example, in a Google Doc that's stored on any cloud service. So definitely advise against storing your seed phrase or private keys in any type of unencrypted format in a cloud service. You should also never enter your seed phrase into any website. So if you had to go to a website that looks like your favorite DEX, and it asks you to enter your seed phrase, more than likely it's a phishing site. And if you lose your seed phrase to anybody else, if anybody gets your seed phrase, they can basically control that wallet and take all the assets from that wallet, and it's highly likely will not be able to be recovered. So storing your seed phrase securely is super important, and from the point of generation. So once you've got your wallet, you will then the next step will be most of the time will ask you to enter a specific order of the seed phrase, and then your wallet is created. So once you have a new wallet, then you need to get your assets to the wallet. So there's a couple of ways in which you can do this. So if you head over back to BNB Chain World, you can see some of them there as well. So I'm going to do that right now. So on BNB Chain World, once you've downloaded your wallet, you'll be able to go and buy crypto. So a couple of ways to do this. You can there's a number of options here. So you can use Binance.com. I'm going to show you that right now. There's a number of fiat to crypto payment gateways like Transact, as well as MoonPay, and these are fairly easy to use as well. So I'm going to show you what MoonPay looks like. So if you click on the MoonPay tab, it will take you to the MoonPay website. And then here is a couple of steps of how you'll do that. So basically you choose which is the crypto asset you want to get. So BNB is the one because you need BNB for the transaction fees. And you can choose the amount here. So it's you can denominate it either in US dollars or in BNB. So if you want to get one BNB, you just switch over to BNB, put one BNB, and you'll see the total amount that you're going to pay. And then you can just work through this wizard. So it's a fairly straightforward process. Like typically you just enter your email or phone number and a few other information. And then at the end of that, you make the payment, and then you'll receive the BNB to your wallet address that you enter here as well. So that's one of the ways. You can another one is called Bifinity.com. So it's BIFINITY.com. And on the Bifinity site, this is it. If you click on personal buy and sell crypto, also very similar, quite easy process. So you just put what's the currency that you're going to pay in. So you might choose this one, and then choose the token that you want to buy, and then the amount, and then we'll take you through a similar wizard process where you need to enter some details and then make the payment. And at the end of that process, you will get your crypto to the wallet address that you specified. The other main way to do this is using Binance.com. And I'll show you some of the best practices of how to do that as well on Binance.com. So let me just switch my tab. Hold on one second. So this is your Binance.com homepage. And if you click on wallet and go to fiat and spot, this is the process that you'll need to go through in order to withdraw any token to your wallet. So if you click on withdraw, And then here is like a couple of steps that you need to go through. So basically you'll choose BNB, and then ideally you should have address management set up, so address whitelisting. So the next step which you'll do is if you click on address management, it's going to open up a new tab. And what that looks like is this basically. So here you can see like a bunch of addresses that have been whitelisted. And here you have a form that you need to fill in. So here you can enter, give a name for it. So this one, I'll just say demo burner wallet. Select the token. So in this case, it's going to be BNB. You'll enter the address here. Always copy and paste it. So most of the wallets all of the wallets will have a feature which allows you to copy the address. So copy and paste the address. Don't write it down and type it out because the wallet's addresses are quite long. So you might make a mistake and then that asset will be lost forever. And then the next one is you'll choose which network. So different assets have like different supported networks on Binance.com. For BNB, it's the withdrawal methods here is the BNB Beacon Chain, which is the BEP2 token, or the BEP20 is the one you want for BSC. So if you choose that one, and then you'll have to enter in a couple more details. Just put the wallet address here. It's another one. I'll just say BW. And then once you enter an address, we'll take you to the next step. It's to verify this adding a whitelist. So basically there's a couple of options which you'll have, which is basically SMS, 2FA, and email authentication. Highly recommend all the users to use all of the available or multiple security authentication methods there, especially 2FA and SMS, as well as email. And then once you've added that whitelisted address, then you'll be able to withdraw your assets to the wallet you've just created. So you can go ahead and do that. Another very useful site for more information about all of these is Binance Academy. So you'll find links to Binance Academy from the Binance.com site, as well as you can just head over to academy.binance.com. And then here you'll be able to find tutorials through a number of different ways. So you can go to topics and filter to tutorials, or you can just click on the search button. There will be a lot of users that are using MetaMask, a very popular non-custodial wallet. So if you search MetaMask, so if you install MetaMask for the first time, you will need to add some configurations and set up to be able to connect MetaMask to Binance Smart Chain, to BNB Smart Chain. So basically here you'll have a guide that will walk you through all of the steps of how to do that. That's a fairly easy one, so you can just copy and paste here to your MetaMask, and then you'll have your MetaMask set up to connect with BNB Chain dApps. Highly recommend to check out the other articles on Binance Academy. There's a bunch of really great articles around DeFi, goes into details about a lot of the popular DeFi dApps on Binance Smart Chain, as well as a bunch of other useful applications. And there's a lot of great new content added here all the time. So definitely check out the Binance Academy. So if we head over back to bnbchain.world, the website where you'll be able to access a lot of this. Another very useful one is once you've got your wallet set up and you've got some crypto in your wallet, how to explore and discover different dApps. So if you click on the Explore the dApps button, it's going to take you to a website called bnbproject.org, which is a comprehensive list and ranking of most of the dApps on BNB Chain. So you'll find PancakeSwap as well as other categories. So if you search by project, you can search game, and you'll see a list of all of the games. So you'll find all of the popular games on Titan Arena is one that I've been playing a lot recently. So if you click on Titan Arena, you'll be able to see more information about what it is and a link to the website as well to go and check it out. But if you want to just head over to PancakeSwap, then PancakeSwap is typically one of the first dApps that most users will interact with. So you can find here PancakeSwap. I'll show you what that looks like. If you click on Visit Website, it will open up the PancakeSwap site. And highly recommend users to always be very careful and check that the URL matches with this one that you find here. And the best practices is really to go there through bnbproject.org or DappRadar. DappRadar also has links to all of the key BNB chain projects. Rather than, I would avoid using Google because Google search results often return phishing sites sometimes. So typically the best ways to access the sites is through bnbproject.org or DappRadar as well as good as, or go through the project's Twitter sites. Just check that the Twitter site is for PancakeSwap, for example, is the original one. And then once you head over and you're sure that the site that you're visiting is the authentic PancakeSwap site, bookmark it and just use the bookmarks going forward. So once you're in PancakeSwap, this is how the interface looks like. You can connect your wallet, click on Connect Wallet. You'll find multiple options here. If you're using another one that's not on the default, you'll see more options here. So most users will be using MetaMask or Math Wallet or Binance Wallet are very popular options, as well as Trust Wallet, or Wallet Connect supports the majority of other wallets. And then from there, there's a whole bunch of interesting and fun things for you to do. You can trade some BNB for cake. You can go and explore the pools. So PancakeSwap adds zero pools very often. So a lot of users are farming tokens by staking cake and will farm tokens that they're interested in. You can also check out the PancakeSwap NFT marketplace by heading over to the NFT, check out all the latest collections. Other popular features here include the predictions as well as PancakeSwap IFOs. So there's a whole bunch of fun things to do on PancakeSwap. And besides PancakeSwap, there's a very large and rapidly growing ecosystem of dApps in the DeFi space and gaming space, NFT as well. So bnbproject.org is a great dApp explorer. You can also check out DappRadar. It's also another good one, so dappradar.com. And then you can filter here by rankings as well as the chain. You'll find here BSC, and then here's a list of all of the projects on BNB Chain. So Mobox, another very, very popular game. So you can check out more information about that, and then open directly the authentic dApp from here as well. So this was a quick guide on some of the key sites that new users will find useful when exploring dApps, as well as setting up their wallets and getting assets to their wallets. Hope you guys found this useful. So just to summarize, head over to bnbchain.world as the first point really for users to get where your the recommended wallets, more information about bridges, the developer docs, links to the fiat on-ramps, as well as a bunch of other useful links here. Hope you guys found this useful. Yeah, also head over to academy.binance.com to get like loads more useful information on these. Thanks a lot, guys. Stay tuned for the following sessions on GameFi and NFTs and DeFi security coming up. Hey everyone, welcome back. Thanks for joining us. So we're going to be talking about a super exciting topic in this session. We're going to be talking about DeFi security. So we've got a great panel of guests joining us here. Thank you guys for joining. So it would be really great if you guys could just briefly introduce yourselves, a bit about your background and what it is that your projects are focused on for the listeners that maybe are not familiar. So maybe we'll start with Leah. How's it going?
Sure, thank you. Good to be here and good to chat with everybody about the future of security. My name's Leah. A lot of people know me as Doc, though. I am the founder of Rug.io and Paladin Blockchain Security, the audit firm. My background is in engineering, but since I got interested in crypto and in DeFi, I've really been devoted to the topic of community security and safety, as well as developer education and safety. So RugDoc is our community front security effort where we provide free, fast contract reviews, tools, and education for investors. And then Paladin Blockchain Security is our audit firm, which is focused on developer consultation and security audits.
Awesome. Thanks for joining us. Hey David, how's it going?
Good. I'm pleased to be here. So I am the VP of Engineering at Certic. Some people also pronounce it Certic. So we are a leading blockchain security firm. We specialize in doing audits of blockchains, looking at the smart contract code. My background is in engineering. I've worked on security and secure IoT and how to build reliable systems. And so that's what we're all about, is helping people write good smart contracts and auditing them.
Awesome. Great to have you with us. And Andrew, welcome.
Hi guys. So I am Andrew, CTO of the Zoki Hub. Zoki is the leading smart contract and blockchain auditing firm. We are specializing in not only blockchain, but also infrastructure security and providing fully fledged service for the audits.
Awesome. Hey, and I see Hartej has joined us as well. Hey Hartej, welcome. How are you?
Hey, Sammy. Hope you guys can hear me okay.
Yeah, we can hear you good. So yeah, we'll dive into a couple of topics. I thought it would be useful for us to cover security from a developer perspective and to hear some of your guys' thoughts and experiences around that as well. Then talk a little bit from end user perspective. I know that RugDoc especially is doing like really great work in that space about thinking about educating users, new and experienced users, on how to evaluate risk and manage risk from a DeFi perspective. And then we can also talk about some technology solutions and innovations happening around that space from a DeFi security perspective as well. But maybe we'll get started on from a developer perspective. So I know you guys are all doing a lot of great work in the auditing space and helping the developer community to think about security from, I think, a number of different perspectives. And we've seen recently, of course, like smart contract exploits are nothing new in DeFi, but some of the newer trends that we have been seeing, especially in terms of exploits, is other types of exploits, like front-end exploits, exploits that are targeting issues around operational security. And we saw a large one happen recently on the Ronin Bridge, which was kind of focused around this type of attack. But maybe Hartej can start off with you. So when you're speaking to developer teams, and I know that you guys also do a lot on the VC side, how are you really trying to get developers to think about different areas of security beyond just smart contract development? You're on mute, Hartej.
Yeah, hey. So I guess, one big thing that I like to raise is that Mark Zuckerberg had a big impact on his philosophy on building software. And it was a bit of a revolution at that time of Web 2 to build fast and break. And he would encourage hackathons where everyone would build really, really fast And that mindset helped build Web 2. And if you look at the FAT protocol thesis by Union Square Ventures, one of my favorite theses in the space, which I think still stands very, very true, and I highly encourage reading the FAT protocol thesis, it shows you how the money in Web 2 was made by the applications built on top of the protocols, and it's completely flipped around in Web 3. And now in Web 3, building fast and breaking it is kind of not the right approach. We really need to think about security on every step of the development phase. And that it's a whole new way, a framework of thinking, because engineers have not been trained to think about cybersecurity while developing software for about a decade now. And on the other hand, when it comes to people who have a traditional cybersecurity background, very few of them are easy to incentivize to come enter the cryptocurrency Web3 space due to the fact that the cybersecurity industry is so profitable and so highly paid, and it's hard to pull people from that space into Web3. I guess the overall big picture advice that we're giving companies is to think about security on each step of your development cycle. And that's probably the most macro advice that you could be giving to a team that can create there's a lot of implications to that statement.
Thanks a lot for that, Hartaj. David, same question for you. We'd love to hear your perspectives on this.
Well, I think Hartaj made some great points here, which is you really need to think about security each step and bring best practices for developing secure software and operating secure systems to Web3. So I think those are absolutely great points. We work with developers directly during the audit process, and we will give them direct feedback about issues and vulnerabilities that we find and how to remediate them and how to address them. And so it's really important that people pay attention to the feedback they're getting from security experts and they implement them. Like one leading issue we're seeing a lot of centralization issues where somebody has the ability to have a privileged role in a project and then do high privilege operations. And really, it's best if you can avoid those kinds of things. And if you do have them, you need to make sure you have good operational security. You need to be using like multi-signature keys. You need to be making sure that maybe you use a time lock or you use a DAO for important operations. And so you really need to take a holistic view of this. You need to have a good design. You need to listen to what the security experts say. The number one issue actually that we see beyond that is just you need to make sure you get an audit and you involve security experts. A lot of projects we're seeing don't even get audits, and like that's the number one thing to start with. And then after that, of course, you have to bring security, developing secure software best practices. And as Hartaj said, there's a lot of information out there already, and you just need to try to bring those practices to your development.
Yeah, that's a really good point, because I think that's one of the messages that we really need to emphasize a lot to DeFi developers is because you do have this kind of gap between demand and supply. Yeah, so the demand for auditing services is huge. And I think there's also a lot of pressure on DeFi teams to also have this kind of like just continuously shipping, just always building new stuff. But you don't always have access to the auditing services when you want them. But we do see that trend with the best DeFi teams just have a lot of auditing always lined up, even if they don't know exactly what code is going to be audited by those teams at any particular point. They just really value and understand the importance of having that resource lined up and understanding the market dynamics today, where auditing resources there's a very high demand for that.
And also, I think it's important to mention that sophisticated teams that we're dealing with build significant internal tooling prior to getting an audit, and they've conducted multiple internal audits prior to getting an audit, making our jobs so much easier. One cannot expect the auditing teams to be writing your internal tooling. That's not an auditor's responsibility. And we continue to see that level of immaturity in the space, but on the other hand, we're seeing a growing amount of maturity in the space, especially from larger, more complex layer one blockchain protocols that are going to be sending repeat audits on a monthly basis. It seems that they are starting to understand that if we need repeat audits, here's how we're going to make our auditors' lives a lot easier.
That's super useful insights. And of course, this event is part of the Revelation, the global hackathon that we've just kicked off. These types of insights are super useful for the developer community. Leah, is there others that you'd like to share with developer teams that are listening here?
Definitely. So of course, Hartaj and David tracked on a lot of very important things that I agree with. And really, I think the most common problems, if we're just talking about like the broad risks that I see, are just incompatibilities in complex protocols. So you'll have one team who made one part of a protocol and maybe didn't consider what library, how it's integrating with another part of the protocol. And like Hartaj just said, it's so important to get an audit at every step and every change you make, because what may have once worked and what may have passed your internal reviews may not work if you change another element to your project. So having multiple audits, doing your own internal reviews, and making sure that you do this at every step along your process and at every major change, or even what you think is a minor change that you make, is so important in making sure that your end protocol is functional, because a lot of these large protocols are playing with tens of millions or hundreds of millions or even billions of dollars. It's something where you really can't just move fast and break things when you're putting that much of other people's money on the line. It really is so critical for these teams to take every step that they do with the seriousness of handling those sorts of large protocols.
Very interesting. So yeah, I think we touched upon a couple of areas here around how the developer teams and developer community should be thinking about auditing. But was also wondering, David, like, do you see demand from teams around operational security audits, front-end audits, or is it mainly still concentrated around smart contracts? And what's the type of behavioral change that you'd like to see happening there to have more comprehensive coverage around all of the different types of attacks that can happen?
Yeah. I mean, we're still seeing primarily smart contracts. That's what we're seeing. Obviously, you have to worry about people attacking the web front ends, doing like a redirect or an off by one. URLs can be hacked easily by having a character that looks like what you think it is and it's not. And so, the thing I would like to do is to come back to what Hartaj said, which is, we do want people to be taking a holistic view and looking at their system. So we do, you need to have, you should have a design doc, you should have a threat model, you should talk about all the ways in which things can go wrong. You should have internal testing that you do, you should make sure you have rigorous testing. If you think something shouldn't happen, you should check that it doesn't happen. And so really, we want people to be taking a holistic view at things. And the comment I make to people, I've dealt with this before, that hackers will go after what's easy. So if you fix one part, they're just going to move on to the next thing that's easier. So you really need to make sure that, for example, you have a good operational security, which means like no one person should have the private key to your projects. And really, this is why we emphasize, we hear about centralization. People sometimes don't like what we have to say, but having these highly privileged roles, if you can automate them, you're much better off, because having these highly privileged roles just means that you sort of have to put trust in the project team, and you have to put trust in their operational security. And so it's really better if you can automate them and stick with the spirit of what DeFi is about.
Super interesting. Hartaj, question for you. Like, considering the growth and kind of the continued evolution and maturity in DeFi, should DeFi teams have red team, blue team, these kind of security practice that we see in kind of like large banks and financial institutions. And considering that a lot of these DeFi applications are like reaching very large TVL, often like in many billions of dollars, and have large user bases, which, you know, that impact a lot of people in a very real way. Is that the kind of direction that we should be going if we're not there yet?
So my advice to teams is a little bit more elementary. I wish the industry was mature enough that I could say, hey, everybody get a chief security officer, and that's what you need. And it should be mandated that everybody has a CISO, you know, someone of the likes of Jason Lau at crypto.com. Crypto.com is one of the very few companies in the space that I've seen someone like Jason, who is well recognized as a cybersecurity chief information security officer, come into our space. He actually understands crypto. He actually understands cybersecurity, and he built this very intricate, very sophisticated infrastructure for that size company. So for companies of the likes of crypto.com and Binance, I think it's very important to be maintaining top tier Fortune 100 standards and to have a chief security officer full-time in-house. But for these up and coming companies, I think that we can't jump the gun and expect them to have a CISO. So my recommendation actually is to first and foremost hire somebody in-house who can head security. And this would be more of a generalist role where this person starts with what I think is like the fundamentals. David was touching upon some of this about automating some of these fundamental processes, but I'm thinking about cybersecurity 101, that this person in-house understands your company. They know who all the employees are. They made sure they all have company laptops and company machinery. They all have 2FA set up. They all have YubiKeys. They've thought about password management. They've implemented an internal process for you to have monthly cybersecurity trainings, phishing trainings. Once that basic infrastructure is set up and this person has their head around the company's infrastructure, the Wi-Fi routers in the offices, who has access to those Wi-Fi routers, they've thought about all of that, that person is usually the best liaison to then deal with a third-party red team, a third-party blue team, a third-party cloud security team, a third-party team to come in and do pen tests, a third-party auditing team. And far too often, even us as auditors are doing stuff on the offensive cybersecurity side, we're dealing directly with typically engineers and the CTO. And it seems that more teams in our space need to have in-house cybersecurity resources. And when they raise their seed round of funding, that they've thought about this, not Series A, seed.
Yeah, thanks a lot. We covered a lot of interesting topics here. So, like, I think definitely the space is maturing a lot, but I think still a long way to go. And it's due to like all the great work that you guys are doing that are helping to contribute, advancing the growth of DeFi in a more anti-fragile way, which is like super critical if we want to see DeFi grow to hit like mainstream adoption. But maybe let's switch gears a bit. We talked a lot about developers, but I also wanted to touch a little bit on the end user side as well. So, of course, today, like end users are the key market participants there, along with developers. But for users that are getting into DeFi today, maybe Leo, we could start with you. What are some of the key like best practices and resources that users should kind of look at when they're doing their due diligence and risk evaluation of DeFi protocols?
Sure. I hate to keep going back, and I think a lot of us keep going back to these basics, but basics get you so far in the space when it comes to security. If people are having good practices to begin with, they're less likely to be taken advantage of by all of these cheap little scams that you see in the space. So there's tons of phishing attempts, right? If anybody's ever had a problem with a MetaMask transaction and has gone and to MetaMask support, you get 10 MetaMask supports trying to, you know, basically get your keys, right? So being able to do just good two-factor, make sure that you know where your devices are, what Wi-Fi networks you're connected to. Really basic OPSEC will get you very far in the space. But once we're shifting to a completely DeFi-oriented experience, being able to understand and evaluate risk through smart contracts and governance is going to be able to give investors a lot of security. And unfortunately, that comes down to investor education. So it really does come down to the investor to try and figure out well, first off, what even is their risk tolerance? Someone's risk tolerance is not going to be the same as somebody else's. So to understand what amount of money they're working with, what their end goal even is, and then being able to merge these things together to figure out what protocols are going to best match their goals and for their risk tolerance. And then from there, being able to understand audits, just basically. You don't have to necessarily be able to read a smart contract, but you should understand the elements that are going to pose certain user risks, right? And so that can be things like these privileged governance roles, who has access to the major functions or the treasury or withdrawals and major transfers in these larger protocols or even smaller ones. How does the team seem? Does the team seem like they have their own good OPSEC? Have they done their own diligence in getting audits, ideally multiple of them, and at every step that they make a change to their contracts or project? And then really being able to compile this all together to determine what is going to fit, like I said, their goals. So being able to keep track of your own security, understanding a project's security, understanding a project's governance risks that they may have, which is going to tell you how much trust you need to put into a team. And then finally, being able to evaluate the smart contract risks, being able to understand what certain basic functions can do with your funds, because ultimately when you put your funds into a smart contract, the protocol takes over at that point, right? That's the point of decentralization, and its beauty and its curse. So being able to understand at a basic level what things you should be looking for in these audits or what you should be looking for in these community peer reviews and how they match up with their goals, I think is going to be the major things that are going to be relevant to your average DeFi investor today.
Thanks a lot for that, Leah. David, is there anything you'd like to add on that? And also, like for regular users, what's the typical contents in a security audit they should be paying attention to?
Sure.
How should they be reading that?
Sure. I mean, the very first thing is make sure the project actually has an audit. That will get you really far with a lot of projects. Second, go to the auditor websites to read the report. Unfortunately, we do have instances where people claim they put a badge up, they said they were audited by us, they weren't audited by us. Go to the auditor's website, get the report. When you go over the report, you're paying the auditor to be the person who understands the technical details of what's going on. And that's what the auditor is being paid to do, is to understand that. You want to look for high risk things. You want to look for, depending on the auditor, you want to look for what an auditor in cybersecurity might call a critical issue. For example, there's a privileged operation that's not properly protected and somebody could do something like mint tokens. You want to look for severe issues. So you want to look for critical or major or severe, the lingo varies. And then from there, you want to understand the kinds of issues that you're looking at. You also want to see how the project team responded. Did they fix this, or did they just say, we acknowledge this issue, but we didn't fix it? You want to see how they responded. And then, in terms of things, you're looking for things like centralization risks, where, and if there is a centralization risk, you're putting some element of trust in the project team. And so that's something that, as Leah was saying, you have to figure out what comfort level you have. And CertiK, we actually added a KYC service now, so project teams can get verified. We can do sort of background checks, make sure they are who they say they are without them getting doxxed. So, if you're putting trust in a protocol or a project that has a centralization risk, you definitely want to try to look for something that has gone through a KYC process. And you want to make sure the people doing the KYC themselves are actually digging in enough to make sure these people are who they say they are and that they don't have problems in their background or that kind of thing. So those are the major things I say. Make sure there's an audit. Look at critical or major issues. And then if you're putting trust in the project team, look for KYC or long-term community participation or a good track record of the primary people involved. Those are the kinds of things that you want to look for.
By the way, Sammy, we have Andrew, our CTO at Zokyo, on the line, so feel free to go as technical and deep as you want to pick his brain.
Sure. I think there's one question that I'll share for all of you guys, starting with Andrew. Is I think in the security community, especially like the auditing community, like very critical work that you guys are doing. But we've also seen recently the development or like some emerging technologies for addressing some of the issues in the DeFi security space. So one example I heard of recently, which sounded super innovative, and I think it was just like a community-driven effort, which was basically some developers have developed like a network or like bots that are monitoring addresses that are recently funded by Tornado Cash, and any contracts deployed by those addresses will analyze the events in those contracts and can act as kind of like an early detection system for exploits that are about to occur, and can kind of provide like this kind of early detection kind of system. And other things are like transaction simulation in the mempool and other types of like kind of innovative technologies that we're seeing like different types of teams like doing research and development on. So curious to hear from you guys, like are there how do you see the ability of these types of technologies to both predict as well as prevent exploits in the DeFi ecosystem, as well as any particular ones that you see as like being more promising?
So I would say that these tools, they are like not just evolving, they already set of the like pre-production use tools that we are using nowadays, and using it a lot. But from the prediction perspective, it's doesn't work 100%, as the mempool in this server, like in this blockchain node, it tracked this transaction. On other nodes it wasn't. And it depends on the type of the exploit. If we are talking about the traditional exploit through the infrastructure, like operational exploits, these tools will not detect it. And to be really secure, you should think about security. And security is not always, it's not just always, it's never simple. You should define the list of all the potential vector attacks. You should put automation tools to detect these attacks, not only from the blockchain side, but from the infrastructure side, for sure. And when we are doing the audits, we always focusing our customers, clients, that they should not only ask us about the smart contracts. It's just the small piece from the whole project. If we are talking about the overall development and delivery of the DeFi projects, smart contracts is like 5 or 10% of the whole code base. And this like simulation tracking tools, they already exist. But the community and the developers ecosystem not mature enough yet to use.
Thanks a lot, Andrew. I see that we're just coming up close to the end of the time. So before we wrap up, just wanted to go around table again. And so the question here for you guys is, where's the best place for people to go if they want to learn more about follow you guys as well as your projects? Hartaj, we can start with you, and then we'll go to Leah and David last.
Yep. Hey, thank you, Sammy, for having me. Thank you, Binance, for hosting. I'm Hartej, Hartej, with an underscore at the end on Twitter. And you can pretty much type in my first name anywhere and find me, Hartej. And Zokyo is our company, Zokyo.io. Feel free to reach out through the website or directly. My DMs are open on Twitter. I'm happy to answer any questions at any time. We're happy to be very transparent and communicate directly with those of you out there building in Web3.
Awesome. And Leah, how about you?
Sure. You can find us at rug.io, which is going to be our main website. We also have free education at wiki.rugdoc.io. That's really just meant to help investors figure out how to even assess their risk tolerance. You can always follow us on Twitter, which is going to be Twitter rug.io. And of course, we're very active because we are a community-oriented, crowd-sourced project on Telegram or on Discord. Our DMs are always open. Mine personally is the Rug Doctor on both. So you can always shoot me a DM. I'm on Telegram, Discord literally all day. So I'm here to answer questions whenever you have them.
Thanks a lot, Leah. And last but not least, David.
So for us, you can go to certic.com. So just go visit our website. The contact information for reaching out to us is there. We've got a leaderboard talking about all the projects we're involved with. We've got blogs and videos there for education. So go to certic.com. If you want to reach me, I'm on Twitter, Dave Tarditi on Twitter. And of course, Certic has their own, we have our own Twitter account there. So go just check our Certic Twitter account. And we also have a new alert Twitter account if you want to sort of see what we're finding in real time and what's going on. So Certic Alert. So anyway, happy to chat. And we too are on Telegram. So we're monitoring it. We're always out there. So if you have questions, let us know.
Thank you guys so much. Greatly appreciate all of your time coming on to join us for this session and this event. Big thanks again.
Thanks for having us.
Thanks, Sammy.
Thanks, guys.
Bye.
Welcome everyone to one of the last sessions of today. We'll be talking with Ghost from Galler and Harrison from NF Trade. My name is Patrick from BNB Chain. I'm super excited to host you guys. We're going to talk about the future of NFT finance. I'd like to start off with a small intro to hear, who you guys are and let the public know, what NF Trade is for those who don't know and what Galler is. Harrison, do you want to take it away?
Yeah, sure. Thanks so much for having me, Patrick. My name is Harrison Seletsky. I'm the head of communication for NF Trade. So we're a multi-chain and blockchain agnostic NFT platform, marketplace, and indexer. Right now, we're live on 6 mainnets. Users can create, buy, sell, trade, and earn NFTs in a decentralized and non-custodial way. And we index all available NFTs across all of our integrated chains for all available NFT interactions.
Cool. Cool. Super
Yeah,
clear.
man.
Ghost. Hi.
Yeah, that's awesome. First of all, Patrick, hey, Patrick, hey, Harrison, nice to be here with you guys and BNB Chain. Thanks for having us. Galler, for the ones that don't know, actually, we're a brand new marketplace, an NFT marketplace. Right now, we support 2 chains, which are BNB Chain, of course, the main chain, and also Ethereum. But we are a rewarding, easy, and fun marketplace for you guys that just are new to the space. No better place for you to have a good user experience. I'm pretty sure that Harrison has probably a different think of it, but I think we're here just to talk about how NFTs are able to change the world that we live in at the moment. And I think that you guys need to just drop into NFT Trade, drop into Galler, check the collections, and just make sure that NFTs are part of your life right now, because a couple of months, years from now, it probably will be something bigger. And me, myself, Ghost, just keeping it as anonymous, but of course, not just staying with the regular profile picture here, trying to do something different also to make it more interactive for the ones that are watching us. But I'm a head of marketing for Galler. So, again, nice. Thanks for having us, and looking forward for this conversation.
Nice. Welcome, guys. Yeah, speaking of changing the world, that's a super interesting avatar you have. I think that'll be part of the future, right? These kind of avatars.
Yeah, I believe so. And it's something that is interesting because we are now in the world of home office and remote jobs. And it's just sometimes you cannot even see the faces of people that work with you on a daily basis. So I think it's also interesting and intriguing for you to just be able to pop in an avatar. We are more than used to the metaverse at the moment. So just having this is also really cool. It's a feature that I believe will be around for a while.
Yeah, probably we're going to touch upon that topic as well, right? Of social profiles and being pseudonymous and anonymous. How about we kick it off? I'm just going to throw it out there, guys, and whoever wants to answer, either I'll pose it directly, or you can just grasp the opportunity. The NFT space has made huge leaps, from being a fad to being adopted by Web2 audience, a bunch of celebrities, causing a snowball effect of adoption and growth. So that being said, what do you guys think is the core value proposition of NFTs for users?
Yeah, I'll get started on this one. I think it really depends on the category of NFT. For the profile picture collections, a lot of the value is based around the provenance and the community. The Bored Apes, the CryptoPunks. You see, these are some of the original collections in the space. They're backed by some of the biggest names. And that alone is driving a lot of the value. So the utility is actually in the network effect and the history. The same thing as a traditional piece of art like a Picasso. It can be extremely abstract, but you're not necessarily buying it for the scribbles. You're buying it for the history, who it's owned it in the past, who created it. So I think that's driving a lot of it. And then there's also the utility side of NFTs, especially in the gaming, metaverse side, even in music. So that has a totally different value proposition, a little more tangible in terms of what it can offer to the end user, because it's actually much more usable instead of an abstract status symbol or piece of art.
Yeah. It seems like users are catching on, right? To the whole narrative of it's just a JPEG, it's staying behind. And now there's, utility being added. People are understanding the link of the blockchain, that it's verifiable, all these kind of things. What do you think, Ghost?
Yeah, absolutely. I think that every new technology, actually, you have like that curve, of adoption where people just start to get used to it. You have the early adopters and they just go on and on until you really establish that new technology as something that is useful on the traditional, I mean, I wouldn't call it a traditional world, but I would say just like on a daily basis, just like people using it as part of their routine. So I think NFTs are actually, I mean, going in that direction. As Harrison mentioned, there are a lot of like real world utility for it. I mean, we also have like ticketing. We have like even projects now dealing with turning researches, like academic researches, into NFTs so they can be used in other places of the world. So I think that, we just like, we're still scratching the surface of what NFTs are really going to become when it comes to utility and 1,000 possibilities behind it. So the value is just like insane. And I think that the possibilities are also like basically that there's no limit for the possibilities of what we can do with an NFT.
Yeah, nice. There's no limit to the possibilities. People just have to see it, right? There's a big resistance against technology in general. That being said, there's obviously a lot of projects that are building, right? And there's a lot of competition out there as well amongst them. So what makes an NFT project successful? Like, what are the key elements to making it successful, right? That it's adopted, that it's used, that it gains traction.
I think that if I can start with that one, Harrison, I think that it's all about community at first, just like if we think of like Web2 brands and what we have been experiencing so far in the past decades. Basically, we talk a lot about the minimum valuable product, right? So, what you can do to just throw yourself in the market. I think for NFTs in Web3, you're starting to talk about like the minimum viable community. So you got to have some community, you got to have something around that, to start something. Because if you have utility, if you have like a good collection or whatever you do, if you don't have a community to back it up, basically, who are your customers, right? So, who is consuming your project at the end of the day? So I think this is the key element, in my opinion. Of course, there is a lot of other things that are part of it, but this to me is like the one key element. If I had to name just one, not sure if you agree, Harrison, but this, in my opinion, that's what drives everything.
Yeah, I totally agree. I like the minimum viable community. I think that's a really nice little catchphrase.
Not mine, by the way.
Yeah, but I think of it almost like a social network where, if you have the most amazing platform, but no one's involved, no one's using it, like it doesn't necessarily matter how amazing it is if you can't drive that community interest. So that's definitely the base layer. And then you have to build from there in terms of unique value propositions, other utilities. And that utility can be the community in itself, which is what a lot of these profile picture collections have kind of built their reputations on.
Yeah, nice. You mentioned value, Harrison. So how do NFTs bring this value, not only to communities, because that's how you get traction, you get users, to the blockchain applications themselves?
Yeah, that's a super hard question because a lot of it is still so subjective. It's much easier to determine if it's a utility-based or gaming item, because then you can track, I spent this many hours, my hours are worth this amount of time, so this is how much I'm willing to sell it for. Or my NFT represents a physical item or is able to redeem this amount of tokens, per day. So that puts more definable value. But in terms of profile pictures and subjective value, it's kind of like the traditional art market where it's kind of just what the person is willing to spend on it. There's a reason Bored Apes, I keep going back to them, but they've increased, to over 100 ETH, maybe like 110 ETH now. And it's hard to say a year ago what the value of a Bored Ape was. And I think anyone that have said it was 100 ETH, you'd be like, wow, you're absolutely crazy. Like, there's no chance it's going to be that. So it's really just, what the world at large is willing to spend. That does create some problems in terms of long-term value proposition, in terms of collectability as well. But you kind of just have to weigh the pros and the cons. And if there's more objective value and objective utility, it's a little easier to measure the actual internal value proposition of the collection.
You make an interesting point because, ultimately, like you said, the community, the users are going to determine through network effect how much a product or an NFT is used or sold or swapped or minted. And you can't foresee in the future, right? Like everyone was expecting from the DeFi summer that a year later DeFi would be in the top 20, but it turned out to be meme coins, right? So yeah, as for NFT, I guess that's what's so cool about the crypto space, that you never know what it's going to look like in 2023. What is it going to look like in 2023, Ghost?
Yeah, to be honest with you, I have no idea, and I think no one, none of us do. You know, it just like it's something pretty interesting because, in my opinion, it actually goes to one direction that is really. I mean, you cannot have a clear answer for it, but it's the emotional attach that you get to your NFTs. It's just something that you cannot explain specifically, but it's like I think it relates a bit to the. I mean, to the way that we love brands in Web2. You know, there are some brands, you know, for example, if you are, let's say, a sports guy, probably you are more, I mean, you're looking into sports brand and you think those brands are the ones that you got to wear and you got to show to yours, you know, just to kind of establish yourself, your own brand. You know, at the end of the day, your own brand is actually made of other brands, of like clothes you're wearing, the car that you have, and etc. But now what we're seeing with NFTs is actually, I mean, which NFTs do you own? You know, do you own a Bored Ape? Do you own a Doodle? Which collections do you own? Which collections are you part of? It's in a Zuki. What is it? Because it also kind of adds something to you, and also when it comes to like really having kind of a authority, you know, when speaking on social media, etc. And since it's in the blockchain, everything is so transparent that you cannot lie, you know. So I think that we are moving in a direction that not just on 2023, but moving ahead, I think that we're gonna be seeing NFT collections actually not exactly turning into brands, because I believe they're already brands, but like establishing themselves not only on Web3, but potentially also a little bit on Web2, you know, make kind of going back to it, you know, and making some presence there too.
Yeah, that's an interesting thought. We're gonna retract, but in a good way. We're gonna go to Web2.
Exactly. I mean, yeah, you got to take what's best. I mean, you cannot just like deny there are good things about Web2 too, and why not like take this and use it in the future?
Yeah, to be honest, it's the best approach as well, simply because you're going to need Web2 as well for your adoption, right? It's a bit, sometimes I always think it's a little bit arrogant to say, yeah, you know, Web3 is here or Bitcoin is here, we're going to take over the world, and we don't need
it's not
Web2.
like that.
No, it's not.
Yeah,
So,
if we want grandma to own NFTs, we're gonna have to go, you know, break into Web2 at least partially.
Exactly. You have to buy grandma her first NFT. So what are, like, this is an interesting one. What are some of the potential use cases of NFTs that are not commonplace yet? Because as you mentioned, Ghost, there's like collections of, you know, there's a Zuki and Bored Apes. There's some more utility now, you know, owning like a fractional ownership of a Patek Philippe. Like, what are things that we're not seeing that could take place?
I think there are still a lot of things, but Harrison, if you want to take that first.
Yeah, sure. So, I mean, you were getting into ticketing a little. I also think actual ownership in people's careers, which is something we've talked about, redistribution of revenue, investing in people at different stages of their life. We're working with a project now. They're releasing NFMs, non-fungible miners. So it's essentially a digital receipt for a physical miner that is generating income, you know, as an IoT device that provides internet service similar to Helium. So there's lots of really, really cool ways where, you know, the NFT kind of bypasses the hardware side. I thought that was a really original use case. I was, you know, thought it was super interesting. So we're really just at the tip of the iceberg, you know, where right now we're seeing a lot of these pictures, and these use cases are going to continue to develop and continue to, you know, permeate the real world, permeate Web2, and just bring additional value to what's already readily available.
Yeah, I mean, I agree 100%, and I think it. I mean, as we were talking before, there is no limit to it. Actually, I was like listening to. I don't know exactly what's the name of the project. To be honest with you guys, it doesn't get to my mind at the moment. But the guy actually ahead of the project was talking about the possibility of also like transforming academic researches into NFTs so they can be used on other places in the world. So because, for example, you have like, for example, countries where you don't have that much monetary incentive to people to actually do research, because I mean, research ends up failing too. And failure is just like you have data, but you can use it for nothing. But maybe in another side of the world, people can use that data for something. So using them, using those research, I mean, transforming them into NFTs and actually sharing those royalties. If, for example, that actual research ends up helping in some kind of development for the future of use of vaccines or something that, I mean, we've been there. We know that is important, the knowledge sharing and all that. So I think NFTs can play a part on that too, and can really be a game changer when it comes to developing solutions in a much faster way, not just for like academic research, but you go on and on with so many possibilities.
Yeah, I mean, in terms of monetization, it opens up all new ways of, people that would be previously releasing something for free, whether that's music, research, art. Now there's a much easier and quicker and safe way to monetize that.
So if I chime into monetization, right, we bridge a little bit to NFT collateralization. How about NFT collateralization in loans? Do you think the market is ready for that, Harrison?
Whether the market's ready or not for it, it's here. So especially in the P2P world, in the decentralized world, where you can facilitate anything through a smart contract. If you have an NFT, you're willing to collateralize it for X% of money I'm willing to lend you with X% of interest. That's going to start taking place. For me, the hardest thing to wrap my head around is determining the actual fair value for collateralization, because these assets are so volatile. But the platforms are already in place. So I think we're going to continue to see more and more of that, especially if you're a long-term holder of a specific project and that token is just sitting idly in your wallet. Even if you're getting 10% of its value or 20% as a loan, and you think long-term it's going to continue to rise or hold its value, that's another avenue for you to monetize and for you to get additional value from your tokens. So the infrastructure is already here. Whether it's going to become mainstream now is hard to say, but in the future, especially as these assets are much more definable in terms of their value, it's going to continue to grow.
So they would have to be less volatile. That's what you say. Have to be less volatile. People feel more comfortable, or there be a baseline of how to collateralize it.
Yeah, or they're just going to have to accept, willing to take a much smaller percent of loans in favor for their collateralization.
Yeah, and it's a work in progress, right? I don't think that we will be ever ready for something, so just like you got to study it at some point, so why not now, and just like keep working on that until you make it really something that is more, it's easier and friendly to the user. So I think that we're going to get there. We're just not there yet.
Yeah. That's a big thing as well, right? We're talking about collateralization of NFTs. I can already say the word. There are some people probably hearing this and thinking, I don't even know what an NFT is. So
exactly.
That's something I'm always fascinated by, because, if you've been in the space for a while and you think back of when you made your first transaction, which was most likely not an NFT, but it's just like the sending of a transaction, opening of an account. Like it's still a very unfriendly world, right? It's intimidating, it's scary, it's highly emotional. So how could we enhance specifically the user experience for people with NFTs? I've seen actually some Web2 companies building a backend where people just log in and they can deploy a contract with a click of a button, or they don't have to understand the tech, they don't have to even know what a contract address is, or have a MetaMask wallet. But what could we do you think?
I think you went right to the point. I think it's first of all making the technology seamless. Just think of the internet and think about other things that we use nowadays. For example, I drive a car basically every day, and I have no clue on how it works. I just know that I enter the car and I get to where I need to be, but I don't know how it works. Crypto, NFTs, it could be the same thing. You're probably going to have to use it, and you don't need to understand how it works. I don't necessarily, you don't need to understand how blockchain works. You don't need to understand how the internet works. You just got to make it in a way that is so simple to the people that are using it that they don't even know what's going on there. So I think that when we get to that point, and I think we're getting there, but it's small steps. It's a work in progress. It's always going to be, but I think we're getting better at it, and just like trying to make this technology seem actually pretty seamless, and the user experience pretty good, and where users need to know, the least amount of knowledge to be able to actually experience it and use it. I think when we get there, that's where we're going to have mass adoption and etc. All those big words that we keep saying, no, we're going to reach mass adoption, we're going to get this and that. So that's when it's really going to happen. And also another thing that you mentioned about being so emotional and stuff, I think that it goes back to as you said, the first transaction. When you're getting into the crypto world, you're afraid, right? On your first transactions, on the first things that you do, you are not 100% sure of what you're doing. You check the address like 300 times before you make the first transaction, and So I think that it gotta be actually to be a rational approach in place, because people that are getting into NFTs, they gotta understand that NFTs are also important as a technology, but it's also a way of profit, and most of people are getting it for profit. Let's be honest, in crypto and all things. I don't know, how you guys got in it, but my first experience was like, oh, this is a great way to profit. And then you discover all the technology about it and all the things and infinite possibilities that you can do with that. But if you can have a rational approach to just making those people just like really down to earth and, hey, understand what it is and understand how to deal with that, I think that's when we're starting to get things done and like to get more adoption. Not sure if you agree, Harrison.
Yeah, I think the technological barrier to entry is still a problem. I still check the addresses 300 times before I make a transaction, and I've been, in the space since 2016. Just as an example, I think one of the reasons NBA Top Shot was so successful and still is very successful was because they eliminated a lot of those barriers to entry, where you didn't even necessarily need to know it was an NFT. You knew it was a digital collectible. You didn't have a wallet address. You didn't have to spend crypto. You were using a credit card. So it was kind of like a mask of Web 2 over like a Web 3 application. So it made it much easier for anyone, people, random friends or peers that weren't in the blockchain space were speculating, and it was easy for them because they don't need to buy MetaMask, buy crypto, transfer to their MetaMask, store their private keys. It was a much more seamless experience. So I do agree with you. A lot of people don't necessarily fully need to understand the deep intricacies, just like we don't understand the intricacies of how the internet works, how to send an email. We just know the functionality is secure and that we're able to execute these types of transactions. So it's going to continue to move that way. Even just applications like MoonPay, something like that makes it easy for you to use a credit card in the Web3 space. We're still really early and we're still building out these base layer technologies that's going to make it easier for everyone to access.
Yeah, I'm not even sure is that even possible yet. Can you go to NF Trade or to Galler and then use a credit card or cash, or can you do these things already?
Yeah, so we do have MoonPay integration. Right now, you use the credit card to purchase the crypto, so you don't have to buy it on a different exchange. You can buy it natively and then make that purchase outright. MoonPay did recently introduce the ability to buy it natively with with credit cards to buy NFTs, and there are a couple other startups doing something similar. So this is all still very new. The people that are using this are still much more technically and advanced than the regular person, but it's getting there slowly but surely.
Yeah,
that's the thing.
Sorry, go ahead, Patrick. Yeah, no, just saying that on our side, we're actually developing those fiat on-ramp kind of solutions so people can have a seamless transition to the NFT world. So, even if you are, for example, a non-crypto user, if you don't know a clue about crypto or just know a little bit about, you can also use that. And I think just as Harrison said, I think that the solutions that we have for it right now are good, but it's actually going to be much better if you just think into the future. I think that everything from the process of you just like, entering a website and just like being able to actually purchase using your, let's say, your fiat solutions, it's going to be much better in the future. I think it's getting better.
Hope so, because if you've been in the space for a while, you also see that change happens very slowly because everyone is so incentivized to keep up. Even if you're full-time in this space, it's hard to keep up with all the developments, right? So you need to have a strong risk appetite for risk and be abnormally curious to get into the space and then be like, oh, what is this? And like you said, Harrison, you check your wallet addresses a lot of times, and very often it takes time to understand abstract concepts. Like even the concept of Bitcoin is very abstract to understand, let alone NFTs. So I'm still curious because I work a lot with community as well. Like, how could we, make it even more simple? It's an impossible task, right? It's just you have to wait for Gen Z to hop on and watch Paul Logan, drop his NFT collection and then be like, oh, that's a cool guy. It's someone I look up to. What is he doing? How does it work? And then there's like a whole realm of utility. It's an interesting process, but do you think we could make it even more simple than it is, though? Harrison?
Yeah, I mean, I think it has to be. You know, a lot of the people in the space, it takes a lot of time to understand how this works and, you know, to feel secure in what you're doing. Even just, you know, MetaMask, even the concept of full decentralization, you know, people aren't always happy having full custody and full control. They want someone that if something goes wrong, they can complain to.
Yeah.
Which is why we've seen a lot of these middlemen even pop up in the crypto space. So it's going to have to become easier, whether that's in a fully decentralized way or a semi-decentralized way. I think eventually it will be able to move to a more decentralized, fully decentralized way. But yeah, I mean, it has to become easier to reach that mainstream adoption.
What would be interesting is if there's like an in-between solution where, you know, it's not a space which is friendly to human error. So if I send my NFT somewhere to your wrong address, I'm not going to get it back unless I know who the address belongs to, which I don't know, or if I do something wrong cross-chain. So if there was like an in-between step on the level of security, people would feel much more confident to use it. But I don't know if that's technically possible, Ghost.
Yeah, I don't know too. I mean, we are gonna see it in the future. I think it's as I said, I believe that everything is a work in progress, and I do think that, for example, we cannot just like put things into a box. You know, it's going to be fully decentralized, or it's going to be fully centralized, or you're gonna have this, or you're gonna have Web 2, Web 3. I think it ends up being like I mean, a mix of everything. You know, we're gonna have like Web 2 aspects, Web 3 aspects. We're gonna have people that are like fully decentralized, and I don't care if I make a mistake, I'm okay with that, and I can deal with that. But there will be people that definitely won't be like happy with that, you know, just like they will. I mean, they like to have someone that they can go up to and say, hey, this happened. I mean, please solve it to me. You know, where are the devs? You know, to solve it to me. So that's the thing. And I think that we're going to have to be able to develop like solutions for all these kind of users, because there is no way you can make everyone happy. I mean, if it's like, as Harrison mentioned, if it's in a centralized exchange, for example, they don't like it because they don't own their coins. But at the same time, if they own it, I mean, they are afraid of not doing the correct transaction. So you cannot make everyone happy. I think that people are also going to have to choose. I mean, what's the pros and cons of being in different spaces and going forward?
You have to make some sacrifices.
Yeah.
Speaking of innovation, where is the innovation taking place now? Where are devs going? What are you guys seeing where they're going? Harrison?
I mean, in my opinion, I think the hardest task for them will actually integrate Web3 with Web 2 characteristics. And that's my thinking, at least. I think that we are having a lot of people doing different things when it comes to use case. I mean, we just started as artworks, etc., but we are like shifting into lens ticketing, like IDs, so many different things that, I mean, I don't know. I mean, I'm not a dev, and Harrison, I don't believe you. I mean, you mentioned you're more of the marketing and comm side too. I'm not sure if you have some dev background. But in my opinion, I mean, those guys are the ones that are going actually to be able to build that space. And yeah, I think that the path is going to be hard for them, but actually rewarding too.
Yeah, I think you gave the answer already before by saying, you know, that we're going back to Web 2. I know you guys aren't devs specifically, but I know maybe because, you know, you have them on your team, you speak to projects around you. Yeah, where's the innovation going to take place, Harrison?
Yeah, so I think what we're seeing now and what we're definitely going to see continue to build out in the next few years is definitely from the gaming side. I don't know if you would consider traditional video games Web 2, but like Xbox, mobile gaming, PlayStation, like that's definitely not Web 3. But now we're starting to see the introduction of Web 3 characteristics where they're games that are running on a blockchain infrastructure where much more of the aspects and the different assets are actually ownable, tradable, and monetizable by the end user. So it's kind of a combination of Web 2, Web 3, as Ghost was saying, where it's these traditional value propositions with new twists that give more value to the end user. So, you know, we started out with games like CryptoKitties, like Axie Infinity, that were more relatively basic, but we're going to see these wild open world, you know, fighting MMORPGs, shooters, like games that have traditionally hundreds of millions of users now, Fortnite style, Call of Duty, but they're going to be fully owned and operated by the community. So it's kind of that combination of both. And if the money is there, both for the developers and for the end users, then, you know, people are going to work on it. People are going to build it out. People are going to experiment. And we're already seeing some of that start to come to fruition. And I think over the next couple of years, we're going to see the first real, I mean, a lot of projects are calling themselves AAA games, but I think we're really going to see some real AAA games come to life in the next couple of years.
Yeah, nice.
I mean,
Very
for
cool.
sure. And I do think that is another thing that actually adds to it. We have seen what Facebook has been doing when it comes to the metaverse, changing names, etc. And I do also think that we're going to experience a lot of things, different things when it comes to social media and potentially using NFTs to actually own pieces potentially of influencers. So, I mean, you think of YouTube, for example, you watch a YouTube channel and a YouTuber, I mean, he gets paid for what he does that potentially. I mean, you can buy a part of that. You can just like use NFTs to actually, I mean, maybe tokenize that kind of influencer. I mean, in different social medias, I don't know, maybe in the metaverse, I don't know. I mean, probably we're going to see a lot of different things coming up in the next few months and years. So yeah, excited for it.
Yeah, very exciting space. And you guys have both given some super valuable insights. We've come to the end of the session, guys. So thank you so much. It's been very insightful for me as well. And I think for the users specifically. Yeah, thank you, Ghost from Galler, Harrison from NF Trade. And I'm looking forward to speaking to you guys in the space soon.
Yeah, thanks so much, Patrick. Great speaking with you guys and appreciate you having us on.
Yeah, thanks for the opportunity again. Thanks for having us. And everyone, just make sure to follow NFT Trading Galler on socials and enjoy your marketplaces.
Cool. Nice. Take it easy, guys. Bye, everyone.
Thanks.
Bye. Hi, everyone. Welcome to the last session of a day of sessions of FutureFi. We've saved the best for last, right? With the future of GameFi. Now it's been great with all sessions all day, but I'm very excited about this one because we have Stacy from Alien Worlds and Win from Thetan Arena and soon from Mobox. My name is Patrick. I'm from BNB Chain, and I'd love to start with like a small round of introductions, like who you are, maybe how you got into the space as well, and then what you're doing at Alien Worlds. Stacy, take it away.
Sure. Hi, everyone. I'm Stacy. I work at Alien Worlds, and I've been with the project since it was pretty early on, not since the very beginning, but probably very early 2021. And I came into the space, I was definitely an early crypto enthusiast, read the Bitcoin white paper many, many years ago and tried to understand what I could from it, and definitely thought it was paradigm shifting in many ways and very exciting. And then several years later, didn't actually get into crypto probably until several years later. And then just kind of expanded with being an enthusiast of blockchain tech and what this technology can do, and kind of played around with making my own NFTs based off of material artwork in early 2021, kind of right as everything was starting to really explode there with that. And then, yeah, then that just kind of led into getting involved in Alien Worlds. And I was definitely excited about how they were leveraging NFTs in really exciting ways and having utility and things like that. So it just was a little bit of a natural progression. And yeah, I've been here ever since.
Cool. Yeah, those are the best stories, right? When it's like a natural conclusion of circumstances. Thank you, Stacy.
Sure.
And Win from Thetan Arena. You're muted.
Okay, thanks, Patrick. Thanks, Patrick, for the introduction. It's my honor to be here with you guys. I'm Wing. I'm from Titan Arena, and I'm really leading for the marketing of the Titan Arena. So, Kyle, I think the Titan Arena is the one of the very first mobile games which published on the mobile, and I think it stays a little bit different from the other GameFi product. We are DeFi and doing the hybrid product in the very first of the beginning. Some kind like it's the hybrid product combined between the traditional gamer and the crypto gamer into the same environment and create a mobile world for the all of user to enjoy experiment of the PvP interaction.
Cool. Thank you, Win.
Okay.
Soon from Mobox.
Hi, how's everyone doing? This is Soon, co-founder of Mobox. We're a game-verse platform where we have a lot of different games on our platform. What we do is combine the best of DeFi yield farming and gaming NFTs and create what we call a free-to-play and play-to-earn ecosystem. So far, we have 4 games released on our platform. We have our own decentralized wallet. We have our own NFT marketplace. Just some milestones that we've achieved over the past year. Over 300 million in NFT trades between users, over 1 million NFTs minted by users on our platform on the BNB chain. We're looking to release our first version of our game verse, or what I call our Momo verse, actually tomorrow. So if you guys have the time, make sure you do come check it out.
Cool. The Momoverse, that sounds interesting. I'd love to hear more about that a little bit later on, because obviously metaverses are very interesting worlds to draw new users in. All right, I'll start with a big topic, right? And whoever wants to chime in can do so. But I'm always interested in the transition from Web 2 to Web 3, because Web 2 is obviously catching on, right, to what's happening in Web 3, just regardless of the buzz, which obviously plays a big role. So if you look at the game studios, the traditional ones, what's the biggest difference in gaming between Web 2 and Web 3? Stacy?
Yeah, one of the biggest things that I can think of is, well, one of the things that's not different is that in gaming, there have been like in-game assets and in-game tokens for quite some time. You can earn tokens in a game, you can earn various other prizes and things like that. And with Web 2, I think that those assets are a little bit more insular in the sense that they can be utilized within the game, but often not extend beyond the game. And so with Web3, a lot of the in-game tokens are actually cryptocurrencies. And so you can trade them, you can stake them, you can do any number of things, and they have utility that expands beyond just that game itself. Not only that, but players and communities can take those in-game assets, whether they're fungible tokens, non-fungible tokens, or other assets, and they can create their own games or build on an existing game and utilize those assets and kind of expand the functionality of those assets as well. So I think that's something that's really exciting that Web3 and blockchain tech enables to happen in gaming. And also another big thing is if the developers of a game in Web2, for instance, stop developing and that game, that game essentially ceases to exist, and same with the assets. And so similarly to the fact that with Web3, we have an extension of the functionality of these assets. We also, those assets can live on beyond the game. So they can be utilized in other ways if the original game slows down or stops developing. And I think that's a really exciting aspect of Web3 gaming.
Yeah, they are. Very exciting. Like, by the sound of it, you would think almost that everyone would naturally transition from Web 2 into Web 3 because the incentives are so high, right? So then the question is, like, why haven't they already? Why isn't everyone on Alien Worlds, like hopping in, learning about crypto? Because those worlds, they align so much from a traditional perspective. They're on Discord, they talk together, they live online, they talk, they're interested in tech, so maybe we would expect the transition of Web 2 to happen sooner, or are we just going to wait patiently?
Yeah, hard to say. I mean, I think in time we'll definitely see things proliferate in that direction. And I think there's a lot of traditional games that are definitely researching different entry points into that space. And yeah, I think we'll continue to see that to expand.
Cool. So soon, like, how do you see traditional gaming giants like Ubisoft, Netmarble, joining the blockchain space? How do you think they're going to enter that world?
Yeah, I think it's definitely great news for everyone, both in the blockchain industry and the traditional gaming industry. Just seeing big players starting to kind of hop on board and understand the benefits that blockchain actually brings to gaming. And no, I agree with Stacy 100%. Having multiple utility for NFTs, that's really important. Making sure that these NFTs can be brought over to different games. And I think that's what we call NFT interoperability. And I think something that we've had, at least the Mobox team or the Mobox platform has been trying to do is create utility where it happens all at the same time. So I think one pretty cool thing that we've done is, for example, the NFTs on the Mobox platform, you can stake them to farm tokens. You can use them in games. You can lend them to other players. You can do all sorts of things, but you can do it all at the same time. But I also think it's really important to see how we can kind of bridge the online and offline worlds and the utility for these NFTs as well. For example, if you have an Ape NFT or BYAC NFT, and you go to McDonald's, then you get a free toy with a Happy Meal. And things like that, that really kind of breaks down the barrier and really starts getting people to understand or try to understand what NFTs really are. I think you mentioned why the transition from Web 2.0 to Web 3.0 has been quite slow is because the barrier to entry is just too high. Learning how to use MetaMask or other decentralized wallets, understanding private keys, getting your first cryptocurrency or your first NFT. There's a whole process there that needs to be kind of eased down in order for mass adoption.
Yeah.
But I do think that we're heading towards that direction with big game developers like Ubisoft and Netmarble. I'm sure that they have the manpower and a lot of ideas on how to ease this process. But another thing that we have to do, I think, is for us to have mass adoption in Web 3.0 blockchain gaming is the GameFi is a very, popular word these days. But in order for us to kind of get more gamers into the industry, I think less focus has to be on the FI and more focus has to be on the game. Because currently, I think a lot of players are in there for more for the profit or the idea that maybe they can earn a buck or two through playing these blockchain games. But in order for us to really go into the mass audience, we have to have actually fun games where people can enjoy and where earning is just a bonus for them.
Yeah. You mentioned a very good point there. Like, it needs to be interesting. There needs to be community involved who, there's some virality to the game where they share it amongst their peers. And that would pretty much set it off. But the element of speculation is obviously also very interesting, and especially with free to earn and play to earn qualities. When you mentioned, Athena Arena is hybrid, right? So how are you guys trying to, onboard new users from play to earn to free to earn and back and forth? How do you get users on board?
So for the question, I think we split our user into the two groups. The very first thing, the most focused thing is the crypto user is as an NFT gamer, is the user focused on the way of invest and play to earn. And moreover, we also have the a model of the free to earn. That's why our game is Titan Arena is also different from the other GameFi. Our game is published on the both App Store and Google Play Store. That's why we can reach to the very traditional gamer that by the effect of the doing the crypto, by the wave of the doing the PR the community in crypto, we are easier to reach out to the bigger community and also we have a very good effect for the organic growth of the game on the store, some kind of like the top download when we launching in the first week. We also in the top 3 game in the 10 country.
Oh, nice! Congrats on that. That's cool. It's a cool stat to have. So Soon mentioned about security, right? And we talked about it in the previous panel session as well. Like the high barrier to entry is people, they don't feel safe. It's an intimidating space. Games are a little bit easier because they're native to like a Web 2 world. That's not an unfamiliar space. But how could we onboard them, Stacy, and then make it seem at least that the space where they're entering is safer if they're having any hesitation there? What could we do?
Well, certainly, as Soon mentioned, reducing the barriers of entry. So, for instance, with Alien Worlds, some of our game mechanics, a majority of our game mechanics are on Wax, and we chose Wax because it had relatively easy onboarding and because it was accessible in the sense that transactions could be signed in the cloud wallet, for instance, in the browser without having to download something, which can be a barrier of entry for people in different parts of the world, for instance. And then also, I think education is huge. So we're going to need education to parallel all of the progress that proceeds from this point forward, because without that, then we're going to have a lot of people who don't understand a lot of aspects and therefore don't interact with it and participate, who otherwise might if they just had that scaffolding to kind of help them understand what's happening a little bit better. So I think education is huge in many senses. Teaching people how to do things in responsible ways, in safe ways, and responding to their, concerns with, various education.
Cool.
So if you don't mind me just cutting in on there, I just want to say that I agree with what Stacy said. As good as BNB Chain is, I think there's one thing that Wax did really well is to lower the barrier to entry. I haven't used Wax for a long time, so correct me if I'm wrong. Basically, you just need to register or log in with Google or Facebook. Is that correct?
Yes.
Yes, exactly. So right there, they already lowered the barrier to entry because the mass audience, they're familiar with using Google login, Facebook login, Twitter login, and whatnot. And no, users always choose the path of least resistance. So things like no Facebook login and these no APIs that we've been using for the past 10 years, if we're able to incorporate that into incorporate that into getting your first wallet, getting your first cryptocurrency, and everything like that, I do believe that mass adoption will come a lot quicker.
Cool, nice. So soon, what are the advantages and the disadvantages of being a crypto native team?
Yeah, funny you asked that because so our team has been in the crypto industry or the blockchain DApp industry for the past 4 years. But before that, we've actually been building and publishing traditional web games and mobile games. We have a lot of experience in this field. We've had multi-million-dollar games both on Facebook, the Apple Store, and the Google Play Store. But we kind of really got into NFTs when we first saw CryptoKitties, and as real gamers ourselves, we felt that this is crazy because you're actually able to own your own assets now, and that's never been heard of. So we built a team. We built our first game on Ethereum. About 80% of all the logic was on chain, and it was actually a really, really bad experience because people would be waiting for an hour or even a day just to open the mystery box.
Yeah.
Yeah, but no, the blockchain kind of infrastructure and technology has improved so much in the past 4 years. For example, while we're using the BNB chain now, it takes them 3 seconds to open the mystery box. So especially for gaming, the positive feedback that you get from every action that you do is very, very important. So I think that we're definitely on the right track, and the industry is definitely growing in the right direction.
Sounds good. Especially the fast transactions. That's the least new users are going to have to expect without knowing the tech. You mentioned Ethereum. So Stacy, what's the potential of multi-chain gaming? How would it be implemented?
Well, I think the potential is quite far and wide, but one of the wonderful things about it is you can leverage the strengths of each chain if you're on a number of chains. So as mentioned previously, that's one of the reasons why we chose Wax to have primary game mechanics, was because it was very low cost, low to no gas fees. It had, reduced barriers of entry, relatively easy onboarding. And we also have game mechanics on Binance, which is a great store of value and has a high number of users. So what's really great is a game can take what they're moving towards, their goals for their architecture, for their game, for their accessibility and so forth, and they can kind of cross-check that with the different strengths of different chains and then pick to build on different chains if possible based off of those strengths. So really it's like getting the best of each world. And I think that's part of what Alien Worlds has done with having game mechanics on Binance and Wax. And then we have our token on Ethereum and Binance and Wax. And so I think that's the direction that probably other projects might go in as well. And the potential there is really quite endless when you think about all the chains that exist and different reasons why different projects might want to build on them.
Does it make it more complicated in the back end? Is it a nightmare for the devs?
That's not my area of expertise specifically, but that's a great question. I mean, I think for a lot of these projects that have been around for a while, there's a lot of trailblazing happening. And certainly I would anticipate that being multi-chain and the interoperability aspect of things will come with its own challenges, especially if maybe you're one of the projects to be the first to figure out those things. At the same time, we have a strong development team, and they've been doing a wonderful job thus far. And I imagine that they run into all sorts of challenges, but they make it look easy. And I think that a lot of these projects are paving the way for other games and have paved the way already, because we've seen such a huge influx in blockchain gaming in the past months and in the past year, certainly. And so those projects that have been around for several years and have been kind of, again, trailblazing and building that architecture, learning, trying, failing, learning, breaking, fixing, all of these things, that's being imbued in the next generations of gaming that are coming along, and, taking what worked well from previous projects and then learning from what didn't work well. So yeah, hats off to our dev team and to all the dev teams actually for all of these projects, because there's a lot of innovation going on and a lot of really high level technical.
Nice.
Yeah.
Cool response, Stacy. Thank you. Nguyen, what about you guys? Are you building multi-chain? Are you know, do you foresee a future of multi-chain?
I think some kind of like the Titan Arena is still looking for multi-chain solution. I think by using the multi-chain at the same time, we can optimize the opportunity to reach to the more potential user in the different chain of the platform. Or we can relate the more option to optimize the gas fees and the transaction fees. But moreover, I think some kind of like Titan Arena team is still looking for the radical solution to implement the multi-chain into the game. I think it's the most of all coming into the UI, UX, or a lot of things coming for the development team. I think some kind of like is the target for this year, and I can back to you guys more if we can find a perfect solution. And at this time, I think Titan Arena is happy with BNB Chain.
Cool. So another one for you, Nguyen. You know, what are like the key challenges, but also like the opportunities in blockchain gaming now?
I think the most important case, the challenging is the pressure of the releasing the new and the high quality content quickly for the both tokenomic and the gameplay. I think so. I think
Why is there so much pressure there? Why is there pressure there?
Because some kind of like as a GameFi product, we also need to release. We also have the roadmap, and we need to commit to all the things that we commit to the user in the roadmap. And all the thing is the roadmap is the very big and new things. Yeah, that's also make a challenge for us. I think it's make a pressure of the creativity, production, and the human resources also, because you guys you guys also know the depth human resources in the blockchain is very limited at the right at this time. The second thing we can share is the business model, because the Titan Arena is the one of the few game follow the hybrid model. We open for the both traditional game and NFT game. It's good for us to make the launching effect and bring the game closer and closer to user. But I think it's also the challenge for us to keep the first thing, I think, is the Google Store and the App Store policy. There's a lot of policy related to NFT and the payment. And the second thing is that we must create a balanced environment for the various type of user. Because the user come to Titan Arena with the benefit of the various of the target. Some people want to earn money. Some people want just to play the game with friends. Some people want to do the esport with Titan Arena.
Yes.
So we need to keep the balancing of the various type. And the third one, I think, is that we must keep the game operate smoothly across the region, because at this time, Titan Arena get more over than 20 million downloads, and the DAU of us is about 1.5 million users a month, and it's located in the various regions in the world, and we need to keep the server to maintain all the things and make the game operate smoothly. But I can say some kind of blockchain comes and change a lot of the game studio environment in Vietnam. Nowadays, I think the game studio had a better way to bring the product closer and closer to a group of the potential community and the user, save more marketing costs and get back with the better performance than the traditional one. And I think the game studio had an other way to get the better for the monetization.
Nice. So do you look at the data points as well, in the sense that do most new players come in, you know, doing free, like free to earn? You know, do they come in, download the app, then play for points, and then transition into play to earn from free to earn?
I think not yet, because we have a NFT item into the game. So kind of like if you invest on the NFT item, you can get the return by the token.
Sure.
Some reward. And we offer a free of the 3 non-NFT hero for the own user, and hero and the free user can purchase more hero non-NFT hero in the in-app purchase shop.
Yeah.
Some kind of like, and one more thing, I think, is because we are doing mobile game, so the most important thing point of the mobile game is the interaction between player and player, and we need to keep the higher DAU for the user to connect together on the battle royale.
That's a good idea. how do you plan to, this one's for Soon, thank you, Wen. This for Soon, how do you plan to connect the users in the Momoverse? You're launching tomorrow, talking about pressure. How are things going?
Yeah, so I think one of the greatest things about and opportunities about blockchain gaming is that number one, it's quite a new industry. You know, it's only been, I would say, really just the past 2 years, if not the last year. And I think one of the greatest things is, no, in Web 2.0, no, the goal was always to extract as much value from your users. But with Web 3.0, I think it's kind of turned around where, no, you're trying to give back as much value back to the user. So I think one thing with developing games and as game designers is, no, is this what our users want to play? Is this the type of artwork that our users would like? And a lot of things like that. And I think with the Momoverse, we kind of took kind of the, I would say, Web 3.0 kind of mindset, where we kind of had the community walk with us throughout the whole process. So it's a very, very early version. And what we've done is, for example, I don't know if users would like this type of UI or that type of UI. So what I do is I throw it into the Telegram group, I put out a poll, and I let the users vote on it.
Oh,
So
cool.
the kind of the user engagement and kind of the feedback that they give you, no, because the users' ideas and thoughts are actually very, very valuable, and it actually makes the whole design process much simpler as well, because we don't always have to kind of just stick to what we think, but rather we can stick to what no majority of people think. So I think with the Momoverse, like I said, it's going to be a really, really early version of it, and hopefully we have a smooth launch tomorrow. But it is a community-built kind of project, so there's still a long way to go, and we're just taking the first stepping stone.
Nice. Good luck with that. Hope everything goes super smooth. I bet it will.
Thank you.
And yeah, you mentioned like probably one of the most important things, community. And I guess the penultimate thing of community is something I want to talk about finally before we round this up with Stacy. Because there's an important element to Alien Worlds, which is that of the DAOs. Stacy, can you describe the role and importance of DAOs for gaming today and in the future? Because that's probably the next big trend after everything that's already been the big trend.
Absolutely. I definitely agree with that. One of the major things I think that is important and of very high value is when communities amass a store of value, whether they're players in a game or otherwise, storing that value in a DAO minimizes the risk of losing those funds or those funds being manipulated, because ultimately they can dynamically change who has access to them and how those funds are spent. So via these decentralized governance mechanisms, such as multi-sigs and work proposals, interacting with the smart contracts and so forth. And that's all done via a voting process where you vote in, and those leaders can be changed depending on what's appropriate for the community at that time. That's also very culturally relevant in the sense that as communities change and grow, so does the culture. And what's great about DAOs is who has access to those funds and how those funds are allocated, for instance, can also change and shift along with those cultural changes as well. And for Alien Worlds, DAOs are at the heart of our project. So we thought it would be cool to put tokenized DAOs in our game and help teach people about these different aspects of decentralized governance, including the mechanisms that are at play. And then our other activities like mining and missions, those are standalone games in and of themselves, but they're also enabling users to tacitly learn about these different aspects of decentralized governance. And some of these concepts are very diffuse to people who aren't privy to it, or who haven't come in and don't know much about crypto or blockchain at all. So it's like, how do we teach people? How do we make this education accessible? We chose to educate people about DAOs by gamifying all of these different concepts of blockchain and crypto and so forth, to help prepare people to want to be involved in decentralized governance and in the DAOs, because I agree with you. I think we're going to see this proliferate. It's already burgeoning quite a bit, and I think it's only going to continue to grow. And really, the concepts that lie in here as far as decentralized governance goes, and communities deciding what's of value to them and how to allocate different funds, for instance, is quite paradigm shifting. I mean, it doesn't just have the potential to shift the way that we look at giving value back to the players, like Soon was mentioning, but also shifting different aspects of society where we see kind of centralized authorities having the agency over things. And again, as Soon mentioned, we're starting to see those things tip on their head and kind of reverse. And I think that's going to permeate beyond just gaming. So it's quite an exciting space. I think DAOs and what happens with them will be a really interesting, hopefully beautiful social experiment.
Nice. Yeah, I think that really sums it up, comes full circle, right? So putting the power back with the users, education, teaching them about DAOs. I think it's a really cool initiative. I think DAOs generally are going to be the most interesting thing going forward in 2023 as well, from this abstract concept, because all these concepts start out abstract, right? To something that comes into fruition. Yeah, we've come to the end, guys, of this session. Thank you so much for attending. Win from Thetan Arena, Stacy from Alien Worlds, Soon from Mobox. Good luck with your launches, your products, your deployments, your roadmaps. I'm sure you're all super busy, as we are all. And good luck on everything. And thanks for attending, guys.
Okay.
Thank you, Patrick.
Thanks, Patrick, for bringing us here. Yeah. Okay. See you guys in the next
Thank you,
session.
everyone.
Bye bye.
Bye bye.
Bye, guys. Bye.